performance. The range per kilowatt hour is absolutely comparable, and in many cases, even better. I mean, the new EQS, I mean, check that out. I'm sure you're going to drive it in the next couple of weeks. From Mercedes is blowing you away in terms of range, charging time, the interior. So I think the product that's coming up, not what's been launched a couple of years back, but the new EV product is going to be very, very competitive.
Aren't many of the world's biggest automakers are suspending operations, especially in Asia, because they struggle to get their hands on chips? How long can this disruption last, and does it have long-lasting effects on automakers?
Yeah, I think it lasts longer than we thought at the beginning of the year. It's a more structural issue. The capacity has been picked up by consumer electronics and car makers. Many of them have given up their slots. Building up that capacity takes longer. I think it might take away a couple of million units this year, which will then we're getting that back in the second half of next year. But it's a painful experience, and it shows how fragile the value chain is. And it also probably gives us some taste of what might happen in the battery value chain when we think about, going down all the way to the mine, supply-demand issues on minerals, cell capacities. I think that's going to be an issue on the roadmap of electrification in the future.
Arndt, thank you so much. Arndt Ellinghorst there, with also a fantastic classic car print there in the background. He's global head of automotive research at Bernstein. That's as far as my classic car chat goes, Matt, but I know you probably know the car model behind Arndt.
I'm a big fan, and I think he's a big fan of that brand as well. I don't want to say it because I don't want to seem like,
we don't sell.
Yeah, I don't want to seem biased towards Porsche in the least, or 911 specifically.
I thought you weren't going to say it.
But yeah. Oh,
right,
did I say it? I'm sorry.
Is the future of art digital? We get the take on the NFT craze from Christie's International Chief Executive, Guillaume Churuti. More from our interview next. This is Bloomberg.
Everybody says we should practice before we go to Mars, but some people say we need to practice on the moon. Well, you could practice on the moon, but you can do it at 1/10,000th the cost in the desert in Utah.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There is a market for crypto art, for digital art. This market existed for many years, but it was very, confidential, very small. That has changed completely thanks to the blockchain technology, because today with the blockchain technology and the non-fungible token, you can, as a collector, own the proof that the work is authentic and unique. And this, in the digital art market, has changed completely the situation. On our market, unicity, authenticity are the key drivers for value. If you can prove them, and if you can reassure your clients about this, you transform the value of the market. That's what is brought now by the blockchain technology. And that's why you have seen recently that at Christie's, for the first time, we sold for $69 million a crypto artwork using this non-fungible token linked to the blockchain technology. $69 million for living artists, people, which is absolutely, astonishing and opening a new dimension. It's just like discovering a new continent or reaching a new frontier for the art market, and it's just the beginning.
Christie's International Chief Executive there, Guillaume Cerruti, speaking to Bloomberg from the sidelines of the Credit Suisse Asia Investment Conference. Bloomberg TV is exclusive partner there. I have to say, Kayleigh, maybe I'm older, maybe I'm tasteless, but actually I much prefer Modigliani to an NFT. Never mind, let's talk about the canal and the fact that there's a massive ship stuck in the middle of it.
Yeah, it's crazy. If you look, we have a great map on the Bloomberg terminal of what the Suez Canal looks like right now. It's like a traffic jam in Los Angeles or some other city that has terrible traffic problems because no ships can get through right now, and it's given a big lift to Brent prices, Matt.
I think Tom Keene would say it's illustrative of the zeitgeist, the transitory zeitgeist right now, because hopefully it'll be unblocked and things will flow smoothly soon. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
And the fight against climate change, Bloomberg Green has you covered.
The public is still engaged, volumes are still heavy, flows are still strong.
Whenever you have this much stimulus thrown into the market, you're going to see things happen like we're seeing today.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
It's just not there. I don't think the Fed's ever going to see runaway inflation.
The economy and the stock market don't always go in unison. This seems to me to be a year in which Main Street beats Wall Street.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
The cyclical trade hitting some headwinds from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance alongside Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene back next week with equity futures bouncing back a little bit, up 14 points on the S&P 500. We advance 1/3%. Lisa, it's been about the small caps and the breakdown in the small caps and the trade that's been the winner throughout much of 2021, facing some headwinds in the last couple of days.
Yeah, almost 4% losses yesterday, and it doesn't necessarily reverse what we've seen in terms of the strength in the small caps, but it raises the question exactly as you put it, are we getting a pause in this cyclical trade, in this bet on a recovery that is more global in nature than just the U.S.? And can Europe get on board? I mean, ultimately, isn't that a big piece of this, John?
We're going to talk about that a little bit later. It's a massive piece of this conversation, Lisa. You look at the small caps, I think we've got to put it in a little bit of context here, perspective. We've had a rally of more than 50% off the back end of October on the Russell, a correction of a little more than 7 percentage points. But the debate is there, Lisa, and a guest that joined us in the last 24 hours earlier this week was talking about exactly this. Will Main Street outperform Wall Street following a year where Wall Street outperformed Main Street? And I think that's the big debate at the moment. It's the economy, the boom we all expect. Have we largely positioned for it already in the first quarter?
There's also a technical aspect here, and I do wonder how much the fact that people can now go out and spend their money on things like airplane tickets and trips changes the dynamic. I mean, there are signs that, for example, the set of Robinhood traders, the day traders, are moving away from some of that activity because they can actually spend their money in other ways. And this, I mean, you're seeing this in real time. How much is that affecting the small caps, which got a really big boost from that, John? It's not negligible. All of a sudden, this cash that was in savings can actually go into doing things.
Well, not my view, the view of Julian Emmanuel over at BTIG, picking up on a similar theme, Lisa, and looking at the volume in call options around some of these really popular stories and how that volume has come in over the last few weeks. We'll talk more about that a little bit later. Good morning to you all. Let's get a story. It looks like this in the markets. Equity futures up 15 points on the S&P 500. We advance about 0.4%. Big snapback in a NASDAQ, up 0.9%. That's where the relative outperformance has been. That's where it stays. And a secret sauce continues to be in the bond market. Yields 162 on 10s, unchanged on the session. In the FX market, finally a break in a euro dollar snapping through that 200-day moving average in yesterday's session. Finally some weakness against the stronger dollar, some weakness that I would argue a lot of people have been waiting for. Euro dollar 118.31, and that snapback in crude too, Lisa, 59 handle. If you want to find some pain in the equity market, you'll find it in size, small versus large. You'll also find it in energy. It has been tough for the energy sector. The big winners of 21 have been struggling more recently.
I gotta say, John, one of the most interesting themes of this week is how even though we've gotten used to a certain appearance of efficiency and speed for the digital era, the physical world is breaking down. I mean, if you take a look at some of the supply chain issues or the semiconductor shortages, and now a blockage, a ship just marooned in the middle of the Suez Canal off the coast of Egypt, basically keeping all of these ships responsible for more than 10% of global trade at a commission, shows you how fragile the basic physical infrastructure can can be from time to time. Today, what I am looking for, 10 a.m., Jay Powell and Janet Yellen going back to Capitol Hill now before the Senate Banking Committee. Expect them to talk about much of the same as they did yesterday. They expect a bit of an inflationary pop, but it is temporary and not that significant. That, according to Jay Powell. Janet Yellen, more interesting. Maybe she'll say more about taxes and also more about a fund for the IMF that could go to emerging markets and possibly help them in their recovery from the pandemic. 10:30 a.m. U.S. crude inventories. I'm really interested in seeing how much they are building. This is what was giving some pressure to oil earlier in the week, the idea that they weren't coming down, the inventories, as quickly as people had expected. And then 1 p.m., John, we're all about the auctions this week just because we've got $206 billion of treasuries being sold. We have $61 billion of 5-year notes. Yesterday, completely uneventful with the 2-year note. 5-year note starts to get more interesting, especially if the Fed is going to hold rates where they are, regardless of inflationary impulses that they view as temporary, John.
A ton of supply. Should we sit on that story just for a moment? The Suez Canal.
Sure.
Look, I understand it. In the media, everyone will go crazy about this. The pictures are fantastic. The story's phenomenal. The numbers are impressive. The numbers around the Suez Canal are always impressive. 12% of global trade. How many times have you heard that already this morning? Isn't this story, Lisa, the very definition of transitory? We'll get excited about it. People will talk about global trade getting backed up. Then in a couple of days, maybe even a week, the ship gets moved, we reopen, we're back to business, and supply chains start to function again.
Maybe. I think that there's a bit of a difference this time around because a number of different supply chains have been breaking down. The idea here that you've got the semiconductor issues, that you've got shipping costs rising to the highest since 2019. And this is yet another kink in a broader story of infrastructure breakdowns. And I wonder how much this encourages people to change some of their supply chains, not just this event, but all of it together and invest more in infrastructure. We're getting durable good numbers at 8:30 a.m. And I wonder how much you're going to hear this kind of commentary from companies, John.
I hope the chairman of the Federal Reserve is asked about it a little bit later. Chair Powell, Secretary Yellen, day 2 on Capitol Hill. Looking forward to that. I want to turn to the FX market as well. It was brutal for anything but the US dollar in G10 yesterday. The Aussie got absolutely hammered. The euro broke down. Euro dollar this morning, 118.30. And the same conversation is taking place in the equity market, is taking place in foreign exchange as well. The big global cyclical trade that we came into 2021 looking for, we're already starting to see signs of it break down a little bit in the equity market after a massive run, and in the FX market through much of this year already. Let's bring in Marvin Barth, Barclays head of FX and EM macro strategy. Marvin, can we start there? Just that breakdown in euro dollar in the last 24 hours. We've had the incremental bad news out of Europe and the incremental better news out of the United States, and it wasn't biting, and then it did. What was your take?
Yeah, so, we've been out of consensus all year and since the end of last year, suggesting that the much anticipated dollar downtrend was not likely to manifest this year, that in fact would be more in a range trade, and that the weakest currency within the G10 would be the euro. But we do expect it to be a slow grind lower, and that seems to be what's happening. I think what you just highlighted there is a really crucial point, which is that in range trades, often technicals become very important. You highlighted earlier the breakdown through the 200-day moving average. There are a bunch of different resistance levels here. As you break through those through 118, actually it opens up a move to the high 116s pretty quickly. So I think that's the thing to watch for at this point.
Well, let's talk about ranges then, Marvin. 123, I think, was the high. We had a 123 handle earlier this year in early January. We've had a breakdown to 118, 118.30 at the moment. You've given me a hint there about where you think the next move could be to the lower side, 116. What's the top end of this range that you're considering right now?
The top end or the bottom end?
The top end, sir.
So I think we've already seen the top end of the range. Could we bounce back towards 120.50? Absolutely. But I think certainly if we break through these levels here around 118, I think it's going to be hard for us to go back up to there. We're going to shift down to a range that's going to be 116 to say 118.50.
Marvin, is this a dollar story or a euro story?
In this case, it's much more about the euro, I think. But what you've highlighted more broadly is the dollar story, right? And I think this is a really important important point, is that in a world that is still tremendously uncertain, I think that gets to some of the disruption issues that you were talking about, Lisa. People are still going to want a high share of safe assets in their portfolio. They've seen that the dollar is clearly the safest asset out there right now. That's been the case for the whole last year. But at the same time, the dollar is the key cyclical play here. So you have both of those. So on days when you're getting a risk off, you see the dollar supported on that. On days when you see a clear improvement in U.S. data and the U.S. leading the cyclical story, you see the dollar improve on that. The key point is you're not going to see people back away from the dollar here.
That's important for emerging markets as well. How much does that upturn or upend some of the consensus bets heading into this year that emerging markets, the higher beta currencies, would outperform?
Well, I think you need to differentiate your emerging markets a little bit more clearly here. This is one of the things that we've tried to do in a fun way. We thought, one way to think about that is if currencies were animals, what animal would they be? And within EM, you get a lot of divergence. And so you've got the sort of gazelles, which are, the North Asian economies, the Israels, the C3 economies of the world that are generally lower yielding. So they're bite-sized morsels, but they're much faster. They're much more connected to this global recovery. And then you've got some of the slower big elephants out there, the Russias, Mexicos, Indias of the world that are offering you good carry, have reasonable finances, and are likely something that you can at least clip a coupon from. But then we warn people to beware of the hippos out there. The hippos are actually the animals that are most dangerous in Africa. They kill the most people out there. They're big, slow animals, but they're incredibly dangerous. We just saw one of those bite this week in Turkey, right? But similar sort of value traps exist in South Africa, and in some other Latin American economies like Colombia and Brazil.
I can't believe I'm getting drawn into this. Marvin, before we let you go, what would you call Bitcoin? What animal would Bitcoin be?
Really, John?
I just want to know. Marvin. Go on. What would it be?
A wasp.
A wasp. Okay. We'll leave it there. Marvin, thank you, sir. Marvin Barth, Barclays Head of FX and EM Macro Strategy. Asked the question for a reason. The CEO of Tesla this morning, Elon Musk, out on Twitter, saying that you can now buy a Tesla with Bitcoin. What's really interesting about this, Lisa, is that the Bitcoin you use to purchase a Tesla, not sure when this starts, won't be converted to US dollars, but we understand, of course, that the cost base is still in US dollars. So what's going to be interesting for me is to see what the daily pricing of a Tesla looks like in Bitcoin and how volatile that's going to be. Does it get repriced every hour, every day, given the swings that we're expected to see in Bitcoin?
John, are you basically saying that we're going to see a Bitcoin Tesla cross on the terminal? I mean, is that basically what you're calling for?
I think we've got to understand how volatile the underlying issue is, and therefore you're going to have to reprice that Tesla every single day by a factor of what? I don't know.
Yes, although... Well, I do think, though, that what's going to happen is they're just going to hold Bitcoin as an investment, and this is a quick way to get it.
I get
and so
that.
This is sort of their way of doing
That's totally fine. But if you have a 20% move in Bitcoin and the dollar cost of a Tesla remains the same, what do you do with the price of your Tesla in Bitcoin? Even if you don't convert it to US dollars, you need to reprice it every day, don't you?
A wasp. A wasp.
There you
That's
go.
What he said.
Whatever.
It's a wasp.
Coming up, Mona Mahajan at 7 a.m. Eastern Time. Allianz Global Investors US investment strategist. Looking forward to that conversation. Futures bouncing back on the S&P 500, on the NASDAQ, up 0.8%. This is Bloomberg.
With the first word news, I'm Ritika Gupta. A giant container ship has run around and is blocking traffic in the Suez Canal. The Ever Given became wedged lengthways across the canal yesterday in Egypt. That's left at least 100 ships gridlocked as they attempt to transit between the Red Sea and the Mediterranean. One expert says it could take days to free up the ship. And it's the same story in Israel, where a deeply divided country has failed to resolve a political impasse in its fourth election in 2 years. Neither Prime Minister Benjamin Netanyahu nor his opponents have a clear path to forming a coalition government. If no one is able to build a parliamentary majority, there could be another election. President Biden is urging Congress to pass gun control measures in the wake of that shooting at a Colorado supermarket. The president called for background checks and a ban on assault weapons and high-capacity magazines. Earlier this month, the House passed a bill that would require background checks for all firearms sales, including those at gun shows. And China is considering whether to create a state-backed company to oversee data collected by tech companies. Bloomberg's learned that a preliminary plan is being led by the People's Bank of China. It would mark a significant escalation in the Chinese government's attempts to tighten their grip over the country's internet sector. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Expect that face-to-face learning is the ideal, but I don't think that we are ever going quite back to that. What we're seeing is more of this integration of the technology into the day-to-day. We have seen that schools have had this kind of trial by fire in terms of trying to reopen successfully, and that many schools have had to use a system of using different ideas around what it would take to reopen and then pivoting when those ideas did not work well, meaning that some have had to go back and had to close. And that's been a global challenge.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
While we're seeing signs of recovery, we should be clear-eyed about the hole we're digging out of. The country is still down nearly 10 million jobs from its pre-pandemic peak.
The Treasury Secretary sounding a whole lot like the Chairman of the Federal Reserve for good reason. They are on the same page. Janet Yellen, the US Treasury Secretary, there on day one on Capitol Hill, day two today in front of the Senate. From New York City this morning, good morning. Alongside Lisa Bramwitz, I'm Jonathan Ferro. Tom Keene will be back with us next week. Here's the price action this Wednesday morning. Equity futures up by 14 points on the S&P 500. We advance about 1/3%. The bigger move is in the NASDAQ, up 93. We advance about 0.7% there on NASDAQ 100 futures. Into the bond market we go. Some real stability. Friday, last week, we saw 175. Had a little look, came all the way back down again. 162.42 on 10-year treasuries. Outside of that, in the equity market, a breakdown through the 200-day moving average on the euro yesterday.
Good morning, traders. I'm planning to buy euro. So if you're up to euro against United States dollar, I'm looking to place an order at 118.285. Okay, 118.285, the order placed. So if you would like to place an order, please follow this trade. It's free. I don't charge for it. When we'll get filled, I will let you know what we're going to do next. Okay? Stay safe. I'll speak to you later.
Now, but that headline just crossing. Germany to drop the plan for a 5-day Easter lockdown. When I get additional news on that front, I'll try and bring it to you. Let's head down to get the news in Washington, D.C. with Emily Wilkins, our Bloomberg government reporter. Emily, I want you to start on something really important before we get into the policy, the infrastructure spending and all of that stuff that markets care about. Let's talk about a big issue now for Washington. The crisis on the border, how the administration is handling it. What's your take at the moment?
So at this point, there is a lot of attention to what is happening at the southern border. We have seen an increase in immigrants coming to the border, and we've also seen that there just isn't the capacity to handle it. We've seen crowding, we've seen crampedness in facilities. We know that in some places it's taking longer than it should to be able to process people through. And the Biden administration is really kind of trying to walk a fine line here. They are trying to show that they are more humane than some of the Trump-era policies. They're not separating children from their parents. At the other point, we did see Homeland Secretary Alejandro Mayorkas tell Sunday shows this weekend that if people are coming to the border, that they should just stay home, that they shouldn't come to the border at this time, and that the Biden administration is working to make sure that if they qualify for asylum, that there will be a way for them to apply and get to the U.S. that's currently safer than simply showing up at the border and hoping that things work out.
Emily, seemingly there is always a crisis at the border, and seemingly it's one half of Washington's fault permanently. I'm trying to understand, looking down to the border right now, whether you think that we have sufficient access to the border to understand really what is going on.
Great, guys. Position is opened, long position on euro. So please stay with me, because we never put stop loss. We always put stop on profit. So as soon as it will change its direction, it's supposed to fill all orders that right now people want to buy, people looking to buy or sell, it's supposed to fill, and then it will, as you can see, it's trying to change direction, and then we will place stop on profit and then move on and on and on and on. Okay, good, well done for all of you who placed the trade. If you want to get the strategy, you know, you can get from company.co.uk. If you want to follow the trade, you're welcome to follow the trade. So we're also going to plan to have the webinar for next week. So if you would like to register for webinar, you're welcome. Probably tomorrow we will have new date and time when webinar will be available. For today, unfortunately, everything sold out. So for all of you guys who maybe wanted to register, sorry guys. And as you can see, we're nicely moving up, and hopefully this trade will give us decent profit. I'll speak to you later.
area where you're wonderful to have on because you can help us parse through the signal versus the noise and how much muscle Joe Biden is putting behind some of his tougher talk against China. And I go to that Intel foundry that's being established in Arizona where they're going to build semiconductors. They're going to build chips for other companies. I'm wondering whether the Biden administration is offering incentives to some of the U.S. tech companies to do things like that, to bring manufacturing home, or if this really is just a longer-term bet by Intel that just makes business sense.
I think it's a little bit of both, but I remember you did see President Biden say again and again that he wanted to make sure that he has this whole plan. It's called, right, Build Back Better, and just sort of strengthening America's economy. I expect this is something we're going to be seeing a lot more of in his next infrastructure package. I mean, we call it infrastructure, but there's so many other things that Democrats are hoping to put in there, including incentives for companies to make their products in America, to buy American. We saw one of his early executive orders asking the federal government to make sure that any products they were buying, to try and make sure that those were manufactured in America. So it's definitely been a focus of Biden's, and I think we're going to be seeing that even more in the coming months as the next big legislative package is discussed.
Emily, great to catch up. Thank you. Emily Wilkins there, down in D.C., our Bloomberg government reporter. I think I find it increasingly difficult to put these two stories together. It's okay if you want to change your approach to foreign policy, a multilateral approach, and we've witnessed that with Europe, the United States, and other countries as well, with China over the last couple of months. But when it comes to the economy, if you're going to maintain America first, this is where the difficulties start. Europe has spent a lot of time over the last year negotiating a comprehensive agreement on investment with China. What was the first thing that the Chinese Communist Party did after Europe and the United States got together on a foreign policy issue on human rights? They went after Europe and put pressure on the Europeans. And that's where this starts to break down a little bit, Lisa. If you want your allies to come along with you on foreign policy issues, you need to work with them on economic issues as well, because China has that commercial leverage in the European economy in a massive way. And that's the pressure point, that's the stress point. And the Chinese Communist Party will push on that button and put the Europeans under pressure. So to maintain a multilateral approach on a crucial foreign policy issue, you need to develop stronger economic ties as well. The two need to come hand in hand. Otherwise, the commercial ties within Europe that China has managed to develop over the last decade, that's leverage that they have on the other side of the story too.
Yes, and I think that you're right to bring up that European deal. However, China can also offer that as a carrot to the European Union, saying, we'll keep with you on this, just work with us a little bit more and keep them away from the U.S. collaboration.
That's precisely the issue. That's precisely the issue. Coming up, David Sowerby, Ancora Managing Director and Portfolio Manager. Looking forward to that chat. Equity futures up 14 points. We advance 1/3 of 1%. This is Bloomberg.
model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy, and we need companies to step up.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio, and here's the price action for you. Into the equity market we go, and here's your snapback on the Nasdaq by about 0.8%. On the Russell, a move of 0.75%, a move higher after a big move lower recently. 7% correction off the highs of the year so far on the Russell. The move off the October low, though, off the back end of October, a 50% rip into the last couple of weeks, and then you get your correction. Is this a pause, a consolidation, a correction? We'll talk about the language you should use a little bit later. Let's switch up the board and get to where some of the pain has been. It's not just been about size, small versus large, it's been about the sector. Energy, this is over the last week, the last 5 sessions. Through yesterday, down 7%, crude biting back a little bit, but still over the last 5 days, off by 8.4% on WTI, and this has been a problem for some of those big trades. The winners have started to get hit in a big way. See it on a Russell, see it in energy as well. Switch up the board and finished on this. The unwind driven maybe by what's happened in the bond market. 10-year yields, 175 last week. This week, all the way back in and more. 162.60 on 10s, 132.49 on 30s, and we're taking down this supply decently. 2-year went okay. Lisa ran you through that. 5-year today. And Lisa, tomorrow, a 7-year issue that's going to get a lot of attention because of what happened last time, but I just don't sense the same nervousness this time around.
No, there's a very strong bid into treasuries, much more so than in the past. Still people watching to gauge foreign appetite in particular. Meanwhile, as you were talking about oil, definitely getting the focus today. Oil prices rallying a bit after getting really hit hard for a number of days because of the Suez Canal story. And John, you're right to bring up this idea of transitory. I mean, this is the ultimate definition of that, to use your words. And yet it does indicate that there is some fragility in an oil market that still has a great deal of uncertainty when it comes to demand in the wake of the pandemic. Julian Lee is a Bloomberg strategist covering the oil markets. And Julian, can you just start by giving us a sense of how long-lasting the effects of this blockage of the Suez Canal could be on the oil market?
Well, I think, it's really going to depend on how quickly they can move this vessel. There doesn't seem to have been much progress at the moment. It's stuck somewhere about 10 kilometers into the canal from the southern entrance, from the entrance from the Red Sea. There's no way of getting around it. So the only way that oil and any other commodities or products are going to flow through or move through the Suez Canal is when it gets moved. And it's really going to depend on whether they can refloat the vessel without having to take any of the containers off the ship. If they can't, then I think the process of unloading it is clearly going to take time. We may be talking hours, we may be talking days. At the moment, we just don't know.
Julian, everyone coming in to work this morning, logging on to the Bloomberg if they have access and going to the Maps Go function can bring up this wonderful looking chart which really illustrates how painful this can be for trade. The yellow dot, of course, where we've been talking about in the Suez Canal, where this is blocked up, and all the white dots, all the ships that have got to go through this particular strait. And this is the problem at the moment, Julian. Whenever there's a crisis, we always talk about the Suez Canal, and a lot of people will push back. The experts in commodities, in trade, will push back and say there is so much effort that goes into making sure this particular point flows through, and without any constraints whatsoever. Julian, can you walk us through that? Just how much hard work goes into making sure that that is constantly functioning all year round?
Well, I mean, it is, you know, a great deal of work goes into it. The canal is kept dredged. The side walls are maintained. There is security along the length of the canal, and you know, and every step that can feasibly be taken to keep the canal operational is. For some commodities, for crude oil in particular, there are alternatives. There is the Sumed pipeline that can carry oil northwards across Egypt. So some crude could be diverted into that. There's also a pipeline across Israel that links the Mediterranean to the Red Sea. That can operate in either direction. So that, you know, could theoretically be brought into use to alleviate some of the flow of crude oil. But that's not going to help move either refined products or liquefied natural gas or containers or anything else. So, you know, this waterway is vital.
Looking forward, Julian, to when this waterway, this vital waterway, is reopened, what is the pressure? Is it upward or downward to oil? Based on what we've seen in Europe, Germany now backing away from their 5-day shutdown during the Easter holiday, is there a sense that there is more room to go downward in oil based on the fact that the world isn't recovering as quickly as perhaps some people were hoping at the onset of the year?
I do think that the demand picture is going to be key. As you say, the demand isn't recovering as fast as many people thought or hoped that it would do. I mean, I've been arguing in opinion columns for many weeks now that we have this period of weakness in the first and potentially the second quarters of this year before the vaccine rollout is sufficiently widespread and sufficiently far advanced that travel starts to open up again, people start going back into offices and workplaces. And we're seeing that playing out. We are seeing a number of sort of stumbles on the road to widespread vaccination, both with delivery issues and take-up issues among populations. And because of that, we are seeing the demand recovery not moving ahead as swiftly as a lot of people had hoped. Clearly, I think the move up to $70 a barrel for oil was overdone. We've seen a correction from that level, but we have to balance what's happening with demand against what's happening in supply. OPEC has, and OPEC plus, the OPEC group plus Russia and a number of other allies have repeatedly delayed putting oil back into the market that they had originally intended to return in January. So we are seeing that the supply cuts are, if not being deepened, they are being maintained at a time when the group had been expecting to ease back on its restrictions. And that has helped, I think, to put some of the support under crude prices that we have seen.
Julian, always great to catch up, sir, on the commodity market. Julian Lee there, Bloomberg oil strategist. On the supply side of the story, dominated by the news coming out of the Suez Canal. On the demand side of the story, the news out of Germany has been a key factor. The news out of Europe, extended lockdowns, etc. We announced earlier on this programme the news that Germany has dropped a plan for a 5-day Easter lockdown. Huge pushback to Chancellor Merkel's decision, met with massive opposition and anger. And now we understand that Germany is to drop that plan for the 5-day Easter lockdown. We also understand that the Chancellor, Angela Merkel, will hold some kind of news conference at around about 7:30 Eastern time, so in about 50 minutes from now. For crude, we're positive by 2.4%, 2.3% on Brent to $62 and about 18 cents, 59.14 on WTI, up by 2.4%. Joining us now, I'm pleased to say, is David Sowerby, Ancora Managing Director and Portfolio Manager. David, if we can just stick on energies just for a moment, massive winner in 21, big loser in the last couple of weeks. Your take, please, on that particular sector.
Sure. The first is Jonathan. I remember asking the CEO of Exxon a number of years ago, pre-Rex Tillerson, can anybody forecast oil prices accurately? His answer was no. I think your rule of thumb is then try to look at oil companies on a valuation basis. So near term, they were overbought. Long term, I think they're oversold because they went through a secular decline since 2008 for over 10 years. I think that makes oil more interesting than not in a 7 to 8% real GDP world to be marginally increasing your names within energy and those that are tied to energy.
Is this applicable, this idea applicable more broadly to cyclicals, to the sort of recovery trade that we've seen pause, whether it be the Russell 2000, whether it be travel stocks, or whether it be oil?
Lisa, absolutely. Again, throw in that 7 to 8% real GDP. At the end of February, M2 money supply was growing 27% year on year. A year ago, it was only growing 7%. Fiscal and monetary stimulus, that's now about 45% of annual U.S. GDP. If you put all those variables in the equation, along with the vaccines, you want to continue to be still owning and gravitating towards cyclical rollout reopening stocks.
David, I'm always interested in the process, not the when. What are the signposts that you're looking for to give you a better understanding as to whether we have lost steam, that the rotation is complete?
It's going to be price and volume, Jonathan, from a technical perspective. It's going to be when sentiment is maybe too euphoric in that space. I don't think we're anywhere close to that yet in the reopening cyclical stocks. Mind you, it's been a significant 7 months that value stocks have recovered, that small cap stocks have recovered. Nevertheless, we've gone through a significant more long-term decline, relative decline for these names, especially dating back to March of 2018, when the tariffs and the trade talks were getting worse for the stock market. While we're only 7 months into this cyclical reopening, I think we've got much more legs to go. History would say that.
David, always great to catch up. David Sowerby there, Ancora Managing Director and Portfolio Manager. Thank you, sir. That's the debate right now. We get calls on both sides of that debate, of course. And this all started for me a number of weeks back when the likes of Morgan Stanley and Mike Wilson came out and downgraded small caps, started to push back against the early cycle cyclical trade because they no longer think we're early cycle. They think we're mid-cycle now. Also interesting in the last 24 hours, Lisa, to see UBS downgrading big tech 3 months ago, then upgrading big tech in the last 48 hours or so because they think maybe growth tech is back on a table.
Yeah, although David Sowerby put it pretty well, this idea of it's short-term overbought, long-term oversold. And that, to me, raises a question. What do you do now? I mean, do you buy this dip? Is this a dippable buy, a buyable dip? Or is this going to be something that you wait to play out because you see more legs to the downturn? I don't know. I mean, I think that you're seeing people swoop in, and you're certainly seeing that today. And I expect there will be more discussion of that throughout the day. That's what my hunch is,
Nasdaq 100 futures now up by about 0.75%. We'll drive you through to the opening bow with equity snapping back a little bit. In the bond market, stability. Yields stable for now, 162.60 on a US 10-year. Coming up on the pandemic, Lawrence Sauer, Johns Hopkins Associate Professor of Emergency Medicine. From New York this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keene, away through the week, back on Monday. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A new survey finds that President Biden's likely wins on taxes will come in the form of higher individual rates and tougher audits of wealthy Americans. Bloomberg surveyed 15 current and former White House and congressional aides specializing in tax policy, and they said that a proposal to tax unrealized capital gains can't make it through Congress. U.S. Treasury Secretary Janet Yellen has promised to work with Congress to ease the $10,000 cap on state and local tax deductions, known as the SALT cap. That's been a key area of focus for lawmakers in New York and New Jersey. The limit was put in place by Donald Trump's tax law. Lawmakers from high-tax states say that's caused their constituents to pay higher taxes. Yellen says she wants a fair remedy for that issue. And in Germany, that plan for a 5-day nationwide lockdown over Easter has been scrapped. Bloomberg's learned that Chancellor Angela Merkel made the decision after the plan was met with massive opposition. Merkel is trying to handle a surge in coronavirus infections and a sluggish ramp-up of vaccinations. And Intel has unveiled an ambitious bid to regain its manufacturing lead. The company will spend billions of dollars on new factories. Plus, it will create a foundry business that will make chips for other companies. It's an aggressive move that puts Intel in direct competition with the world's most advanced chip maker, that's Taiwan Semiconductor Manufacturing. And Tesla is going all in on Bitcoin. It stunned the market last month with a $1.5 billion investment in the world's largest cryptocurrency. Now, CEO Elon Musk says you can buy one of his electric cars with Bitcoin. Musk also says any Bitcoin paid to Tesla will not be converted to a traditional currency. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
accusations of vaccine nationalism are so wrong in terms of Europe, because we are very international in our approach. We're exporting. I think we should maintain that, but have good conversations with other stakeholders about maybe what they might do to reciprocate.
EU Commissioner McGuinness there on the situation in Europe. From New York City this morning, good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keane out of the building. He'll be back with us on Monday. Here's the Wednesday morning price action. Let's whip through things quickly for you. S&P 500 futures up a little more than 10 points. We advanced by about 1/4%, up 0.6 on the NASDAQ. Not much price action in your 10-year. In the bond market, yields 162.25. A lot of issuance we'll talk about in just a moment, coming a little bit later. For crude, 58.95, we bounced back up 2 full percentage points. You've seen and heard about the blockage in the Suez Canal. That's an interesting energy story we can touch on through the morning too. In the FX market, a break at a 200-day moving average on the euro. We've already touched that a million times this morning. Euro dollar 118.23, and coming in at 0.2%. The PMIs have just been pushed to one side out of the continent this morning. The March PMI, for anyone that's interested, in America, coming up at about 9:45 Eastern. So Lisa, yesterday we had the 2-year, today the 5-year, tomorrow the 7-year. Any reason to be concerned about taking down this supply in the next couple of days?
Not based on the action that we're seeing in the bond markets today. I think that what you mentioned about the PMI is really interesting, this idea that we had better than expected data out of Europe. No one cares. At what point does data matter? Or at what point is it all backward looking? And are people looking and trying to game out the future based on some other metrics, John?
Trying to game out the future based on where we are with vaccinations right now, for sure. Europe versus the US. The new number in the United States, we track it daily. On average, over the last 7 days, your average rate of vaccinations in America, 2.5 million doses per day. Kind of hanging out and in around that level over the last week or so. Let's discuss that now with Lauren Sauer, Johns Hopkins Associate Professor of Emergency Medicine. Lauren, always great to get you back on a program. So let's just start right here. Yesterday, Texas have announced they're going to widen out the eligibility for everyone, I believe 16 plus, all adults, from next week. Lauren, when you see those kind of decisions being made, do you see that being driven by the data? Is something else driving that story? What's your take?
I think it's a mix. I mean, I think it's less about the data and more about getting as many people into those spaces. So if Texas is creating a space where they can get massive amounts of people and they have the supply to back it up, then, that is definitely an approach that many people are advocating for. And we're seeing it in a lot of sites across the country. I think the key is that the vaccine supply has to back up that process. So giving people appointments and then canceling them at the last minute because the supply doesn't come back may negatively impact people's willingness to come back and try again to get that vaccine down the road. So you have to be careful with that approach. And you can't take that approach and just sort of drop off targeting these harder to reach or more vulnerable populations. So those things have to happen in tandem if you're going to go the way of mass vaccination to everyone eligible.
Lauren, what do you make of the science behind what you can and can't do once you have been fully vaccinated, and the very little detail we've had on that front over the last couple of weeks?
Yeah, I mean, I definitely think we probably could have done a better job of planning to have this conversation. The challenge is that we don't really know, and that's not a space that people are comfortable sort of saying. That's not a thing that people are comfortable saying. We're all learning about what you can and can't do as we see the results from these different vaccine trials, as we see the transmission data and the people who go through the vaccine process and end up not getting sick, which is exactly what you want to see. The first vaccine studies are really focused on how sick people get or don't get after they get the vaccine, less so about that transmission. So we're looking more at whether or not it protects you from severe disease, and less whether or not it protects you from actually getting infected. And those studies are happening now, and that's why the guidance is rolling out a little more slowly than people would like. I agree. I think it's important to have a good sense of what you can and can't do, because that's what allows people to say, okay, here's what I can do, here's what I can't do, I'm going to continue to follow the rules. When you ask people to make up the rules themselves, they're always going to veer on the side of what feels more comfortable for them.
I gotta say, it seems like we're moving to a new phase of the pandemic, where we started with a scientific conundrum, a scientific problem that people were trying to solve in laboratories and with social distancing measures. And now we have a messaging problem broadly, in addition to a scientific one, when it comes to both the US and who's eligible, who's not, in terms of what you can and can't do after the vaccine, as well as in Europe. And I want to talk about the Angela Merkel reversion, basically saying, forget it, the 5-day shutdown over the Easter holiday is off. Do shutdowns work, or is this just a mirage to show we're getting tough?
Yeah, I think shutdowns do work, but they also have a dramatic impact on the population, right? So before the pandemic, we really had no data on whether or not these massive shutdowns and border closures and things like that worked. We just didn't have the experience with them to know. And data are coming out of this pandemic to say that they do work, and when they're very restrictive, they also have a negative impact on the population. So use them with caution, use them with care, and do all the other things like the social distancing, like the masking, and of course, like getting your vaccine, that we also know work, that allow us to ease up on those restrictions safely, slowly, and carefully.
Meanwhile, Pfizer is testing a COVID-19 pill to remedy the illness if you get it quickly. How much does this change the equation if this becomes widely available and actually is effective?
Yeah, this is huge because one of the challenges that we've seen in the therapeutic side, so on the drug side, less on the vaccine side, is something that we can give outpatients who may have been recently exposed or have just started getting sick. That's easy to administer and can be done in the outpatient setting rather than an injection or an infusion that can be more challenging to quickly administer or even give a prescription and have people head home and take themselves. So I think everyone's going to be watching this. All eyes are going to be on the data from this study. And it's a very hopeful option. So as we start to add more of these therapeutic tools to our toolkit, I think we're going to see these options that allow people to safely stay home, not seek care at a hospital if they are less ill or if they're really early in their course.
Lauren, thank you. Please come back soon. Stay close. Lauren Sauer there, Johns Hopkins Associate Professor of Emergency Medicine. Just some news on the shipping incident in the Suez Canal. Traffic expected to resume soon, according to GAC. GAC, a shipping services company, commenting on the Suez Canal, saying the traffic is expected to resume soon, Lisa. That news coming in the last couple of minutes.
And pretty much in tandem, you're seeing oil prices just decline a bit as people assess the temporary or not effect of this. John, you were right. It seems like it's very much temporary, but the question, as Julian Lee was saying, is it days? Is it weeks? It seems like maybe hours.
It's not about being right or wrong. It's just about the media again and again and again jumping up on a story of pretty pictures on an issue that was clear was going to be addressed pretty quickly in the Suez Canal, Lisa. That was my frustration this morning.
And that's a fair frustration. I think the bigger issue, and I would agree with that, and I think it's important to frame this as a standalone incident that is temporary. There is a bigger issue that's being fed into food prices that have been elevated. You see across the world with shipping delays, with prices rising to the highest since 2016. And that focus, I think, has longer lasting legs. How long? That also is a question.
I totally agree with you. Lisa Bravitz, Jonathan Ferro, counting you down to the market open as we drive you forward. Equities are up 0.7% on the NASDAQ. Bond yields are stable, up almost a basis point to 162.78. This is Bloomberg.
Not only just COVID, but it's COVID related, but it's also stress related to job. I think COVID probably just sort of was the nail in the coffin for a lot of us. having the destruction room here is also a very healthy outlet. I do not encourage it as something that we do on a regular basis, but I do find that when people come in, being able to break plates, being able to write out whatever's on their mind and letting it go, being able to just take out their frustration and their anger.
We're thankful to be able to come to a place like this and be able to break some stuff and release some tension without going to jail.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The public is still engaged. Volumes are still heavy, flows are still strong.
Whenever you have this much stimulus thrown into the market, you're going to see things happen like we're seeing today.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
It's just not there. I don't think the Fed's ever going to see runaway inflation.
The economy and the stock market don't always go in unison. This seems to me to be a year in which Main Street beats Wall Street.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Yellen and Powell testify day 2 from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene is off today. In your equity market, up 13 on the S&P 500. We advance 1/3%. The NASDAQ outperforming this morning, up 0.7%. This morning, Lisa, 10 a.m. Eastern time, they go in front of the Senate Banking Committee.
Yeah, and the range of issues here is just phenomenal. The idea of, yes, you have the stimulus and where we are there, how it's getting deployed, how much has been deployed. Then you have taxes, an issue of Yellen and how much she supports raising taxes on a variety of different constituents. Then you have inflation, and of course you have international relations. One thing that we have underplayed today is really Janet Yellen coming out in support of an IMF fund to support developing nations that President Trump, former President Trump, actually shot down, raising questions about the international collaborations on that front too, John.
A range of issues. We'll touch on the international ones a little bit later in the hour. Let's sit on the domestic story just for a moment. The push to maybe hike taxes, Lisa, going forward from here. And we talked about the bias of this market right now to focus overwhelmingly on the spending side of things, the stimulus, the relief. At some point, taxes hit the radar. I think they already have.
Yeah, although you're not seeing it necessarily in people's price targets for equities. Perhaps that's the reason for the pause, although you'd expect that to hit the big tech names harder than perhaps the Russell 2000. There was a story today on the Bloomberg talking about how the most likely tax hikes will be on wealthy individuals and that corporations probably will be secondary in that push.
Tom Keene dropping an email in my inbox on Spurs.
Oh, no.
And someone that Tottenham Hotspurs is partnering with. I'm going to move on really quickly. Hi, Tom. I assume you're watching. You're meant to be on vacation. Unbelievable. Here's the price action. It looks like this, 7 Eastern. Equity futures up by 1/3 of 1% on the S&P 500. NASDAQ 100 futures up 0.7%. Into the bond market we go. 5s today, 7s tomorrow. Lot of supply. 162.25 on 10s right now. Unchanged. Outside of that, crude still positive. Bouncing back after a really ugly story the past week for crude prices. 59 handle on WTI. And equity futures doing okay, up 1/3 of 1%. But the FX story got my attention. I know it got your attention too in the last day or so. Euro dollar breaking down 118.25 and down 0.2%, dismissing the PMI data, the preliminary read for the month of March. In Europe, at least, the US PMI data coming up a little bit later this morning, Lisa.
Yeah, the divergence between Europe and the U.S. continuing to widen, despite any data showing otherwise, because it is backward looking. We were just talking about this. What we're looking at today, 10 a.m., day 2 on Capitol Hill. Jay Powell and Janet Yellen are appearing before the Senate Banking Committee, and we talked about the range of issues that they will be addressing, most likely. There are other issues as well, Bitcoin among them, that potentially could come up. And then also the discussion of their collaboration. The head of the Treasury, the head of the Federal Reserve, they seemingly are interchangeable in some ways. How do they work together in a new way going forward? Then 10:30 a.m. U.S. crude inventories, particularly in focus because of the Suez Canal issue. Yes, it is transitory, temporary, seems to be on its way to being resolved, and yet we have seen a lack of demand, at least relative to expectations, that has been borne out in some of the inventory data that we'll be looking for. And then 1 p.m., the U.S. is selling $61 billion of 5-year notes. We're getting toward the more interesting maturities, John. Perhaps we'll get some action here to give some indication of what longer-term Treasury demand looks like, both here and abroad.
Lisa, looking forward to the supply a little bit later. A 7-year issue will get our attention tomorrow, I'm sure. Let's turn to Mona Mahajan now, Allianz Global Investors U.S. investment strategist. She joins us. Mona, great to catch up. As you've said, we're starting to see some fatigue in the big winners through the last year, going back to late October as well. I'm trying to understand how you approach a market like this one right now. Huge rip since the end of October. You start to see fatigue. How do you approach what you see on the screen?
Yeah, absolutely. Look, I think it's been a phenomenal market since really last March of 2020. This year, 2021, has really been a story of the reopening trade, that value trade, the rotation into value, into the reopening stories, and out of really that growth in some of those large cap COVID winners from last year. Of course, over the last few days, we've seen a bit of a reversal of that because rates have started to come down a little. Maybe there's some questions around the reopening, given news of variants, given news of some states seeing rising cases, clearly given what's happening in Europe. So we're starting to see a little bit of pause around that reopening value cyclical trade. What we're thinking about, of course, is as we're heading to this summer of really that real unleashing of pent-up demand by the consumer and perhaps the real unleashing of the stimulus really flowing through the system, we may see this value cyclical rally have one more leg or maybe some legs through the summer. But what we're really thinking about then towards the second half of this year are some of the risks on the horizon. And those include one, peak reopening. At some point, you're going to get a peak growth rate. Maybe it's 2Q, maybe it's 3Q. But at that point, the second derivative starts to slow again in terms of GDP growth. The second, of course, is we do think that yields can continue to grind higher. We do think that the 2 handle on the 10-year is feasible this year. And so that will cause some additional volatility and pressure. And then finally and thirdly, of course, is the Fed, who has been quite accommodative thus far. We think that continues for most of this year, but at some point, they're going to have to come off this crisis level accommodation that they've been providing. So this was really rates at the zero bound, unlimited QE to some extent to really help at the heart of the pandemic. We're now clearly trying to reemerge from that. So, some things we're thinking about, a lot of the good news, a lot of the reopening story, a lot of this value trade is starting to get priced in. So keep in mind, if you haven't yet, you do have an opportunity to tactically layer in some cyclicality, but just be mindful then as you're heading towards that second half of the year.
Mona, you've gone through a lot of issues there. Everyone's got their own approach, their own process to work through. A lot of people talk about where we are in the cycle. The early trade is the early cycle playbook still with us. Is that going to last another few months, maybe another quarter, another few quarters? Morgan Stanley think we've already seen the early cycle move. Do you use the same approach, Mona? Do you have that early cycle playbook? And when the cycle do you think we are in this market?
Yeah, absolutely. I think we are reemerging from a recessionary environment. And of course, this recession is different from some of the others, which are more, rates driven or more consumer driven. This was a pandemic and a health crisis. but we're clearly reemerging from it, and that playbook actually came to fruition in a very real way this year. So certainly areas like energy, financials, industrials, the cyclical stocks, the reopening plays, those all took a nice leg higher. And so a lot of, what they call the easy money perhaps has been made. But that being said, we do think that the earnings growth environment, there's still upside to some of the numbers that we're seeing out there, especially on some of these sectors like financials, like energy, like industrials. Some of the areas that do well as rates continue to grind higher, of course, financials, especially with the steeper yield curve. We think areas like industrials may have some legs given the infrastructure package that we think will start to come to the forefront in the weeks ahead. Even areas like clean energy, which has been a real focus of the Biden administration and has now sold off, as the NASDAQ has sold off, or as a lot of the growth stories have sold off, could have another leg. We think that's a secular growth theme that if you haven't yet had exposure to, is an interesting one here. So certainly we're looking at it more from now, a more active approach, taking a sector, by sector positioning approach rather than a broad market approach. And so I think, at this point in the cycle, after we've had this reopening rally, we have to really be more selective going forward.
Just to be clear, Mona, is the reopening rally done? Have we reached a plateau and we're just going to fluctuate from here? Is that what you're saying?
I think that there is one leg higher. And, if you think about seasonality, sometimes it's sell in May and go away. But generally this year, I think, when you look anecdotally, those summer months are really when we're going to see that pent-up demand unleashed. So, the consumers will hopefully have the next round of stimulus checks in their pockets. The vaccination program here in the U.S. will be more fully rolled out. And so you'll really see then that demand for areas like travel, like going back indoors, perhaps even to restaurants, going to sporting events. And so I think that when the economy really is going through that hyper demand phase, we'll see the market actually react to that. But that's when you have to start thinking about, well, after that, what happens? Are we at peak reopening? And so I think, you probably have a little bit of steam left in this rally. But it's probably time to start thinking about being a little bit more neutral or cautious as we head past the summer months.
Mona, you used one line in this conversation that always jumps out to me when people say the easy money might have been made. And I always pick up on it, so forgive me for doing so. Did it ever feel easy?
Ever since March of last year, it's felt a little bit tough. And so I think, that the whole dichotomy between Main Street and Wall Street has always been a tough one to swallow. But I certainly think in this case, the markets have been very forward-looking, and perhaps they were really since last year looking towards the second half of 2021. And so they were very astute in realizing that at some point we will have a program in place that will help us get through the pandemic to reopen fully. And interestingly, the retail investor last year played a very large role in that. So, the retail investor in some way was the winner in 2020, really kind of kept that optimistic outlook throughout the year. And so they really benefited from that. So yes, we've had an optimistic reopening trade, you could argue, since perhaps March, April of last year. So hopefully, most investors participated in some way in that. The good news was last year, if you had the growth stocks, this year you could actually have some opportunities in the value stocks. And so that's why we think, though there is still a little bit more catch up and perhaps a little bit more rebound to go in that sector. If you think about it, a lot of these value names like financials, energy, industrials, they are still flat, slightly up to March of last year. And so they have some catch up to do to the NASDAQ, which is up, 20-30% from its February 2020 highs. So interesting market still, one where, again, just be selective, be active, but you still have some opportunities to go.
It's never easy. Mona, it's great to catch up. It's never easy. Mona Mahajan, Allianz Global Investors US investment strategist. And to Mona's point, Lisa, it's never easy because it's hard to be optimistic when the world around you is falling apart. And that was the difficult part of the last year.
It's hard to be optimistic? Who knew? You think that it's hard for me to be optimistic?
I think it's definitely hard for you to be optimistic. That's for sure. Coming up, 8 a.m. Eastern, Chris Grisanti, MAI Capital Chief Equity Strategist and Senior Portfolio Manager. Equities bouncing back, up 0.8 on the NASDAQ, up about 0.4 on the S&P. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. At the Suez Canal, authorities are said to be close to refloating that giant container ship that ran aground and caused a massive traffic jam. That comes from an Egyptian shipping logistics company. The Ever Given became wedged lengthways across the canal yesterday in Egypt. That's left at least 100 ships gridlocked as they attempt to transit between the Red Sea and the Mediterranean. It's the same story in Israel, where a deeply divided country has failed to resolve a political impasse in its fourth election in 2 years. Neither Prime Minister Benjamin Netanyahu nor his opponents have a clear path to forming a coalition government. If no one is able to build a parliamentary majority, there could be another election. President Biden is urging Congress to pass gun control measures in the wake of the shooting at a Colorado supermarket. The president called for background checks and a ban on assault weapons and high-capacity magazines. Earlier this month, the House passed a bill that would require background checks for all firearms sales, including at gun shows. In Germany, that plan for a 5-day nationwide lockdown over Easter has been scrapped. Bloomberg's learned that Chancellor Angela Merkel made the decision after the plan met with massive opposition. Merkel's trying to handle a surge in coronavirus infections and a sluggish ramp-up of vaccinations. And GameStop is hoping to bounce back from disappointing earnings in the fourth quarter. The video game retailer wants to make good on a comeback plan that had helped to turn it into one of the year's hottest stocks. GameStop has appointed a trio of executives with tech experience, so they'll be a big part of the plan to make the company an e-commerce power. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Indicators of economic activity and employment have turned up recently. Household spending on goods has risen notably so far this year, although spending on services remains low, especially in sectors that typically require in-person gatherings.
Chairman Powell on the U.S. economy alongside Secretary Yellen. They'll do it again today in front of the Senate Banking Committee from New York City this morning. Good morning. Alongside Lisa Bramford, I'm Jonathan Ferro. Tom Keene away today. Here's the price action for you in the equity market. The S&P 500 futures up 18. We advanced 0.4%, up 0.8% on the NASDAQ. Into the bond market we go with yields higher by almost a basis point to 162.95. In the FX market, euro dollar back down to 118.28, just about holding on to a 118 handle. Crude still positive, Lisa, 59 handle, even with this back and forth over the Suez Canal in the last day or so.
Yeah, perhaps as people coming in and reassessing this reflation trade, the theme that you've picked up on today, this idea of are we seeing a pause that's going to continue in terms of this rotation into cyclicals, which includes oil, which includes yields going higher, and includes banking stocks, or is this something that is a reassessment of the market, I think is the key question for today and frankly for the entire week, John.
That is the debate of the moment as we count you down, drive you forward to the opening bell. Let's drive you forward to Washington, D.C. and the latest on the policy front. Kevin Cirilli, Bloomberg Chief Washington correspondent, joins us now. Kevin, Intel throwing billions at the U.S. economy. Walk me through why this is so important and why it lines up so well with the approach from this administration and, for that matter, the one that came before it.
Two things. First and foremost, manufacturing jobs, which we mentioned a couple of weeks ago, that are going to be intricately linked to the semiconductor chip shortage that we have seen the Biden administration really say is a top priority on the U.S.-China front. And then secondly, in terms of infrastructure, I mean, this is a clear opening bid, so to speak, that chip infrastructure, manufacturing is going to be intricately linked to a longer-term U.S. domestic strategy to diversify the supply chain. And candidly, I think Intel getting there first is only going to attract other companies to do the same thing.
They want to go after China. They want to go after Taiwan Semi. The U.S. wants to make sure we invest in this country. The companies want to track down Taiwan Semi, which have done so much over the last few years, Kevin. There's a lot of catching up to do. What are the administration doing to help these companies achieve those goals?
Well, look, I think that's where things get dicey because Republicans would say, John, that they're not doing enough and that by raising the corporate tax rate, that's only going to deter companies like Intel and other companies from investing in the United States and doubling down in terms of where they would like to make investments domestically. So that's a part of a longer-term debate that once infrastructure really gets started with is going to be very difficult for Democrats and Republicans to come to some type of consensus because yesterday I was speaking with lawmakers and they still remain worlds apart on how to pay for $3 trillion worth of stimulus.
Okay, perhaps the payment is the main issue in terms of getting some sort of bipartisan support for a bill. But there seems to be a consensus that there are problems with respect to technological prowess and with respect to the supply chain. A viewer who works in farming wrote in, the supply chain has become hyper just in time with zero capacity for exogenous shock. And we're seeing that in the food inflation that we're seeing, as well as in delays for chips and other supplies. Is there any consensus on how to combat some of these supply chain kinks and the sort of disruptions, these exogenous shocks that can erupt?
Yes, there is, between people like Senator Mark Warner, the chairman of the Intelligence Committee, even to some extent Senators Tom Cotton and Marsha Blackburn, two Republicans who have been urging for there to be a diversification of this supply chain. I go out even to lawmakers like Congressman John Garamendi, who's a Democrat from California, Napa Valley country, and he has urged for there to be some more diversification. I think you're going to see over the next couple of weeks and months people like Senator Chris Coons, a Democrat from Delaware, Biden's home state, put together some type of package as it relates to China, but the hope, from what I'm hearing based upon my reporting, Lisa, is that this type of package will be a nonpartisan bill that will move through Congress, similar to the bill of a few years ago that Senator Schumer and I believe Senator Cotton were able to push through in terms of investment to diversify supply chains.
Nonpartisan bill is hard for me to wrap my head around right now, and I'm trying to figure out how big it would be. Work. I imagine a fraction of the $3 trillion. How could this be constructed? In other words, what could a size of a consensus bill be? And does that mean that this $3 trillion effort really has to be piecemeal, a number of different bills spread out over perhaps months or even years?
No, I think it's a really good point. I think this is the type of legislation that, quite frankly, doesn't really get the attention in the mainstream press. I think it's more in the wonk world, in the policy weeds that we focus on. And so I do think that this will not, while it won't be a major initiative in the sense that it will grab a lot of water cooler political chatter, similarly, for the past couple of years, there have been funding bills, there have been defense funding bills that typically are bipartisan that ultimately get through. And I would argue that based upon the conversations I'm having, you could see a bill like that move on China.
Kevin, before we let you go, I do want to talk about China and how it folds over into the foreign policy effort on the multilateral approach that this particular administration is trying to develop. It's okay to do that on foreign policy. A lot of people are endorsing that approach right now. But if you maintain the America First approach on the economy, how do you support your allies and make sure that China and the Communist Party doesn't leverage the commercial ties it has with the Europeans?
Simple. It's auto democracy versus auto technocratic regimes, and that's really the battle line that I think this administration is trying to put forth, in the sense to say, if Europe were to make deals, especially on 5G technology, on other parts of technology that relate specifically to benefit the Communist Party of China, would that be a long-term play that they would be willing to grow in? Or do
honestly,
they want to go with,
hold on a second, Kevin. Kevin, I understand that this is a highfalutin topic, this respect democracies, but at the end of the day, it's about money. And if China is getting money and getting business to Europe, doesn't that speak louder?
No, I don't think it does, because I think ultimately it comes down to democracies and the value proposition of investing, which, by the way, democracies do have a financial benefit. But if you look at some of the human rights abuses, the genocide occurring in the Xinjiang province with the Uyghur Muslim minorities, I think this is a bigger issue than just money.
Kevin, it's good to catch up, sir. An important point. Kevin Cerulli, Chief Washington Correspondent and host of Sound On Bloomberg Radio, weekdays at 5 p.m. Eastern. Things have become a whole lot more complex in the last decade on the China-US front, that's for sure, Lisa.
Yeah, I think this is the real conundrum here. At what...
Okay, guys, something went wrong with camera. I'm trying to fix camera as well. I need to speak to my technical staff. I'm going to place a stop on profit for euro at 118.30.5. Just right here. Okay, stop on profit placed at 118.30.5. Okay, so all of you, if you enter this trade and if you decided to follow this trade, please do place stop on profit. Okay, speak to you later.
Alongside Lisa Bramford, I'm Jonathan Ferro. Coming up on this FX market on euro dollar at 118.34. Kid Juice of SocGen. This is Bloomberg.
All right, guys, that's better. Camera fixed. Like I said, please place stop on profit 2 pips above your entry level. If you purchased at 118.285 plus 2 pips, 118.30.5. Okay, and depends how much broker pays you per pip, you will get the profit. 2 pips. This is what it's all about, to trade as a day trader. You need to, based on a relatively small amount in pips, you can make quite a large amount of profit per day. Because we place many times with euro, with other pairs orders, and then small profit, small profit, small profit, and then at the end of the day, we end up with quite substantial amount of profit. How to do that? You will find from our strategy that you can get it from companyi.co.uk, or you can see the address on red line on our ticker. You can get the strategy and you can discover the secrets how we trade. I'll speak to you later, guys.
By the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
From New York City for our audience worldwide, this is Bloomberg Surveillance live on TV and radio. And here's the price action this Wednesday morning. Good morning to you. A bounce back in the equity market on the S&P 500, the Nasdaq, the Russell. The Russell is where the outperformance is. That's where the underperformance has been more recently. On the Nasdaq right now, up 0.8%. The key to that may be some stability in the bond market once again this morning. If you switch up the board and get to 10s, just quickly, I'll run through things. 2s, 10s, 30s. Yields unchanged at 162. We get some 5-year supply today, some 7-year supply tomorrow. Your 30-year at the moment, 232.26. Yields doing not a lot. We get Chairman Powell and Secretary Yellen day 2. I'm sure you're super excited for that. Let's finish on this in the FX market. Euro dollar, a break at a 200-day moving average. Looking forward to catching up with Kit Dukes of SocGen about that. Finally, a break in the single currency. Euro dollar 118.32, weaker by another 1/10%. We've talked about the incremental bad news coming out of Europe, the incremental better news coming out of the United States, and the limited ability to push that through this FX pair. More recently, yes, we've had a move from 123 down to 118, but that 200-day moving average has been really quite stubborn, so that break has been key. And now I'm trying to worry and think a lot more about whether we've got...
Okay, guys. Position closed, as you can see. Just right here. We made already profit. We closed position. We made trade. It took us from 10:30, 20 minutes past 10, until, what time is it now? 11:30. It took us about an hour to complete trade from the beginning to the end, as you can see. And in our case, we got 2 pips. We have £200 in profit. In your case, it all depends how much you decided to invest in this trade. And what you trade? You can trade CFDs, you can trade E-minis, you can trade even options. It's all about how much broker pays you per pip. For our strategy, you can go to company.co.uk website. Okay, well done, guys. Let's look for another pair, and I'll speak to you later.
That transition to digital, it continues. John, let's take a look at Viacom. Mentioned this yesterday as well, as they fell 9%, falling an additional 6.5% today, announcing that share sale of $3 billion. Streaming is expensive. They just signed that contract with the NFL. It's going to cost them $2 billion a year. How do you fund that? You do it with share sales. Tesla, Bitcoin, dare you guess what this story is? Elon Musk at 3 in the morning, John, tweeting they're going to accept Bitcoin for Tesla.
I thought it was interesting.
How many Tesla are you buying with your Bitcoin?
Look, here's the issue. This will still be priced in dollars, and the sun is still the dollar, and the Bitcoin will still orbit the sun. And that's the issue for me. The only interesting thing about this is that they'll be purchased with Bitcoin, and those Bitcoins won't be converted back to US dollars. That's what I think is the interesting part of this particular story. They won't be priced in Bitcoin. They will be priced in dollars, and that price of Bitcoin for a Tesla will have to be adjusted seemingly every day, every second, every minute.
I have to find my Bitcoin password. I lost it. I think I have $20 worth of Bitcoin. Someone gifted me $10.
$20.
Like 5 years ago or something. Maybe
Thanks
it's worth
for that,
$30
There
now.
we go. We appreciate that.
I could buy 1/10 of a Tesla with my Bitcoin.
Good luck. Taylor Riggs, back at the close this afternoon on Bloomberg Television, a little bit later on this afternoon. Let's get to the FX story. Euro dollar 118.31, a break of the 200-day moving average in the last 24 hours. A clean break. Kit Jukes joins us now, SocGen Chief FX Strategist. Kit, great to catch up, sir. Let's just talk about that clean break we saw in the last 24 hours. How key was it for you?
Oh, I think psychologically, that's enough to push us down to 115, 116 on momentum. I think it's enough probably to flush out what's left of the short dollar long euro position that's been hanging over the market really for the last couple of months. So we'll clean the market out and then we'll start again from actually a better base to go forward. So I'm glad it's done that. We've been stuck in ranges for too long, but we need to clean the air.
Kit, we've cleaned the air, and now I'm trying to understand whether we've reached that point of peak pessimism, Europe, peak optimism, the United States. How would you approach that question now?
We're pretty close, let's put it that way. You wouldn't want to be, to say it's definitely done, but if you add the bits together, in the last 6 months, we've revised up consensus forecasts for 2021 GDP in the US by 2%, let's call it 3.5 to 5.5. We've revised down the forecasts for the Eurozone by 1.5%. That's a mad move in terms of the scale of it. We've seen this dramatic move in yields higher in the United States relative to Europe, all at the same time as nothing much has happened at the front end of the curve. The Fed's still doing what the Fed's doing. And remember, it's 366 days ago since the Fed effectively wound up a series of moves which said, we've got this. And gave us a long period of super low rates. None of that's changed. That's why the dollar's weaker today than it was way back then. So, yeah, I think we're in the I think we're in the last act of the dollar bounce, frankly, at this point. But it's going to play out over probably weeks, not days, because that's the nature of it.
This is a really important point, Kit, and it actually runs counter to what other people have been talking about on the show for the past couple of days, that we're in the last act of the dollar bounce and that we're pretty close to peak optimism with the United States. Are you calling for a significant weakening in the dollar throughout the rest of this year versus the euro?
Less significant than the move that we had from 107 to 123, but we should get back to a higher high than we saw in January. I don't think this move's done yet. I think the bulk of the move comes when you get more global optimism. At the moment, it's more a relative story than a global story because the US has done so much better in every regard than almost everyone else. When the goodness spreads and we get optimistic about everything, then I think you'll see a more conventional weaker dollar story underpinned by Fed policy, underpinned by capital flows. But that's only going to sort of feed through gradually in the course of the next few months. But yeah, at the end of the day, the dollar was very, very expensive and is still expensive because the US had exceptional monetary policy compared to the Bank of Japan and the ECB. That is no longer the case. And the dollar can't go on being this expensive.
The idea of global recovery, I think, is valid. There's this idea, okay, perhaps the Euro region is lagging behind the U.S., but eventually it will catch up and the pandemic will be over. But there is a leadership question that was really highlighted this morning with Angela Merkel reversing her decision to have a 5-day lockdown over the Easter holiday. And then she came out and just recently said, this mistake was mine and mine alone. She said she made a mistake in backing the Easter lockdown. There is a leadership vacuum in Europe that has been highlighted by the vaccination rollout. How much does that factor into how strong the euro could potentially get versus the dollar?
It plays a part, and there's kind of, you can have a bad taste in your mouth, if you like, at the idea that Europe piggybacks on the back of US fiscal policy and things like that. It doesn't necessarily always encourage us, but even so, it's not new. I mean, the structural weaknesses of governance in Europe and of leadership in Europe have been there for a really long time. What makes the European currency unable to withstand extreme cheapness is, the persistence of a very large current account surplus and a valuation that's only held down by the fact that the ECB does so much more than other central banks. Take the ECB's exceptionalism, if that's the right way to put it, out, and the euro will be stronger however badly run Europe is.
I want to bring up these headlines coming out of Germany, Kit, and just sit on them just for a moment. It's phenomenal. The Chancellor turning around and saying she's made a mistake in backing the Easter lockdown and going on to say she wants forgiveness from the German people for making that mistake. I mean, Kit, that is truly shocking to have this situation in Germany right now and to see the Chancellor just 180 within 24 hours on a massive, massive issue. From a currency perspective right now, as a market participant, how are you approaching the politics in Europe, which I have to say, Kit, is reminiscent of what we saw coming out of the last financial crisis? Everyone just seems to be all over the map on key issues.
Yes, I mean, I sit in a country where it's been pretty clear at various points that trying to do the right thing with lockdowns is very difficult, and when you don't do it, you pay for it in terms of the human catastrophe that comes with it. It's people are bored of lockdown, or they're fed up with it, and politicians trying to do the right thing to avoid more people dying run into a huge amount of resistance. So the whole thing is a nightmare. I think it's a nightmare for people more than for politicians. So I'm not surprised that you get this indecisiveness sometimes in turning up all over the place. But again, I'd come back to the fact that on my day job, looking at foreign exchange markets, what I have, in a sense, is I have an environment where you could have as much indecisiveness over the pandemic as you like. If you had intelligent fiscal policy in Europe, I would just say the currency is going to go up a really long way. What I'll say now is the euro is not going to go up because of anything that anybody does in Europe, particularly. The euro is going to go up because it can't go on being this cheap if the Fed's not got completely different monetary policy from us, and the governance doesn't count.
Kit, it's good to see you, as always. Good to catch up. Kit Jukes of SocGen, the Chief FX Strategist. Just want to repeat these headlines coming out of Europe right now from Chancellor Angela Merkel. Unlike what you've seen elsewhere in the world through this pandemic, an acknowledgement that someone has made a mistake. It comes from Chancellor Merkel. Mistakes must be acknowledged and addressed. She asked forgiveness from German citizens. She made a mistake in backing the Easter lockdown. That is one heck of a 180, Lisa, in the last 24 hours out of Europe's largest economy.
Policymakers have had a really tough time. I'm not giving her a pass, right? But there is a question. How do you follow the science in a way that reflects the fatigue in populations? If you start to impose lockdowns at a time when people are just done with it, they're going to disregard all your advice. I mean, it kind of goes to your question, John, a couple weeks ago when you said, okay, we can have small group gatherings on July 4th.
Yeah.
How many people are going to wait until July 4th to get together with their friends? People are saying, look, we'll take the science into our own hands and we'll make plans accordingly.
It's been tough for policymakers, tough for airlines in Europe too, Lisa. Let's just talk about a price action briefly. A move of 4% lower for Ryanair Friday, Monday 2.3%, Tuesday 2.3% lower, bounce back today. We'll be catching up with Michael O'Leary of Ryanair in just a moment, Lisa, alongside our colleague, good friend Guy Johnson. Huge conversation about what travel looks like later this summer, Lisa.
Yeah, and the question is, how much can it really surge in the European region versus, say, the United States, domestic versus international? It's going to be tough.
It is going to be tough. Looking forward to catching up with Guy Johnson and the Ryanair chief very, very shortly on this program. Heard on Bloomberg Radio, seen on Bloomberg TV. This is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. A new survey finds that President Biden's likely wins on taxes will come in the form of higher individual rates and tougher audits of wealthy Americans. Bloomberg surveyed 15 current and former White House and congressional aides specializing in tax policy, and they said that a proposal to tax unrealized capital gains just can't make it through Congress. U.S. Treasury Secretary Janet Yellen has promised to work with Congress to ease the $10,000 cap on state and local tax deductions. That's known as the SALT cap. That's been a key area of focus for lawmakers in New York and New Jersey. The limit was put in place by Donald Trump's tax law. Lawmakers from high-tax states say that that's caused their constituents to pay higher taxes. Yellen says she wants a fair remedy for the issue. And American refineries are buying more Russian oil than ever before. That comes at a time when Washington is talking about energy independence and warning Europe not to become too dependent on Moscow. Sanctions prevent U.S. refiners from getting Venezuelan crude, and OPEC has cut back shipments. So last year, Russian oil became an option. Russia was the third largest supplier of oil to the U.S. in 2020. And Intel has unveiled an ambitious bid to regain its manufacturing lead. The company is going to spend billions of dollars on new factories. Plus, it will found a foundry business that will make chips for other companies. It's an aggressive move that puts Intel back into direct competition with the world's most advanced chip maker, Taiwan Semiconductor Manufacturing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are worried not just for what happens when you are on the airplane itself, but what happens when people travel. That is, they go out, they mix with people who are not vaccinated. We currently are at a situation, if we look at our European friends, we just don't want to be at this rapid uptick of cases again. So I would just encourage people and remind people now is not the time to travel.
Now is not the time to travel. That's the view of the CDC director, Dr. Rochelle Walensky, in your market right now. And we'll talk about that in just a moment. Equity futures are up 0.7% on the NASDAQ. On the S&P, we advance 1/3%. This is the story, isn't it? That's the message you get from the CDC. At the same time, this market's talking about something else, focused on reopening. That's been the dominant story since we first got the vaccine news at the start of November, the end of October. This market is absolutely ripped. So let's talk about that right now. I want to bring in my friend and colleague out of London, Bloomberg's Guy Johnson. Guy, isn't that the issue right now? The CDC saying one thing, market's looking at something else. And if you talk to our friends and family, they're thinking about other things through the summer too.
Absolutely. Everybody's trying to figure out exactly how they're going to get away for some sort of a vacation holiday throughout the summer, John. And it's interesting, you listen to what the CDC is saying, and it's a similar thing over here in the UK as well. The scientists incredibly cautious about traveling. Certainly here in the UK, that is the narrative. But John, investors just don't see it that way. Bring up the chart of Ryanair from the beginning of 2020. We're back to the same levels that we came in to 2020 at. Basically, the stock has completely rebounded, as you can see. During that period, actually, we're up by 7.5%. So investors certainly see a reopening, as you pointed out with Lisa just before the break. A lot of volatility, though, in the stock over the last few days, as we've seen the equivocation from the UK and the case counts climbing within the EU, the health situation getting worse and worse. Let's bring in Michael O'Leary. He's the Ryanair CEO to talk about this. Michael, good morning. You were talking about the idea on a call a little earlier on that you're going to be flying 80% of the schedule that you would normally fly, kind of July to September. What's your degree of confidence in that number?
Yeah, good morning, Guy. Good morning, John. I mean, I think there's a reasonably high degree of confidence at this point in time that short-haul flying will significantly recover, I think, through the peak summer months of July, August and September. That's driven by the success of the vaccine program in the UK. 50% of the UK population has now been vaccinated. By the end of May, that will be at 80%. Europe will catch up, I think, over that period of time. We think 50% of the UK adult population will be vaccinated by the end of May. They say 70% by the end of June. And then I think you will see a pretty rapid recovery of short-haul holiday travel between the UK and the European Union through the summer. Already, the Portuguese, the Spanish, the Greek and the Cypriot governments have said they're going to welcome vaccinated UK travellers from the 17th of May onwards. So, you know, it's uncertain, but I think there's a reasonable grounds for optimism that once the school holidays arrive, June, July, August, that we will see, I think, quite significant recovery of short-haul travel within Europe. You won't see long-haul recover this summer, but again, a lot of people who would normally have gone long-haul for their holidays to the States or to Asia will holiday at home in Europe, and we think Ryanair will be the beneficiary of that.
You sound confident. You think it's going to happen later on in the year, but the date keeps getting pushed to the right, and certainly the noises out of the UK over the last few days have been less than optimistic. Michael, you said this morning that you could survive if we don't have a summer season. My question to you is, how?
Well, we have a very strong balance sheet. You know, we're sitting on more than $3.5 billion of cash at the moment. We have a very small cash outflow. Most of our aircraft are grounded at the moment. Most of our pilots and cabin crew are on furlough, pay schemes, etc. So we can survive. We don't want to survive. We do want to see people return to travel. And I would put the question back to those UK governments. If, as the UK government has, you vaccinated 80% of the adult population by the end of May, why are you restricting their movement? they're at very little risk. I mean, the one thing we know from the vaccines, the experience in Israel and in other countries, is as you begin to vaccinate large proportions of the population, the risk of serious illness, the risk of hospitalizations, and the risk of death, fatalities, almost collapses, certainly falls to very low levels. Now, we're only locking up at the moment, not to limit the spread of COVID, but actually to eliminate the risk that COVID cases will overwhelm the hospital service and the health systems. Once you've eliminated that risk with vaccinations, frankly, I think people are going to rebel. They're not going to be willing to be locked up. The kids are not going to stay home from school. Life will return to normal, and I think COVID will become, I mean, it will still be with us, but it will be much more, I think, similar to the annual flu, the annual cold, because of the success of vaccinations.
Well, Michael, as you know, they might rebel, but right now it's illegal to go on holiday. So until that's lifted, we've got a problem. So my question to you would be, how hard are you lobbying on the vaccine passport issue, and how close are we to a breakthrough?
Well, I mean, as you know, John, it's illegal to drive over the speed limit, but lots of people do it too. Again,
So, Michael, let me jump in. Are you telling me that your summer is reliant upon people rebelling and getting on the plane and breaking the law?
No, I mean, I was going to move on to say, certainly long-haul travel will be much more restricted, but you have free movement of people within the European Union and in large measure between the UK and Europe as well. Now, I think by the time you get to the end of May or end of June, you have all of the high-risk categories, the elderly, the obese, the infirm, have been vaccinated. 80% of the adult population have been vaccinated. The children have a lower rate of catching COVID but don't suffer serious illness anyway. What would be the base on which UK governments would be finding people moving around Europe where, by law, we're entitled to the free movement of people? So, again, be careful. I think short haul, domestically within the US, there'll be very few restrictions this summer. And short haul, I would say, within the European Union, there will be very few restrictions.
Michael.
Long haul will continue to be restricted. Yes. Guys, sorry.
Michael, you're clearly focused on the summer season, which is going to be the holiday for the kids. But nevertheless, short haul is driven by younger demographics. They are going to be the last to get the vaccines. Is that going to be a problem?
No, I mean, again, summer holidays tend to be driven by families. The school holidays across Europe typically start through June, July, August. That's when the schools are off. That's when families are moving. I mean, young people are generally working at that point in time, generally, hopefully, in the hospitality or tourism industry. I think that's what will drive the recovery. And then, everybody predicts that Europe will be awash with vaccines through May, June, July. We're not quite sure what the date will actually be. And I do accept that the date has moved backwards. But we still see that there's sufficient time and sufficient vaccination room left to run. We still have April, May, and June to go to allow us to recover the holiday season in Europe through July, August, and September.
Michael, let's make some producers nervous. We've got 45 seconds left. Play with me just for a moment. Chancellor Merkel says she's made a mistake. She's backing down from that Easter lockdown. Your response to that this morning?
I mean, I try not to respond to the instantaneous comments of politicians. We announced new rules this morning from the UK for the European peak. We expect to run most of the schedule through July, August, September, and we're reasonably confident with that kind of outlook.
Michael, come back soon. Stay close. It's always great to catch up.
Thanks, John.
Michael O'Leary, good to see you, sir. Ryanair's CEO. Guy, tense time over in Europe, and there's an airline trying to do business.
Yeah, and what the amazing thing is that the investment community just sees a recovery. That's what's priced. You have to wonder what happens from here. I think it's going to be a bumpy ride, both for travellers and investors, John.
You couldn't agree more. Guy Johnson out of London, Jonathan Ferro here in New York. Alongside me, Lisa Abramowitz, counting you down to the market open. Equities up 11 on the S&P. We advance a third of 1%. From New York City this morning, this is Bloomberg.
How can somebody remember things that happened 80 years ago? How do you do that?
David, it's easier to remember 80 years ago than what I had for lunch today.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
We are reemerging from a recessionary environment. And of course, this recession is different from some of the others.
Whenever you have this much stimulus thrown into the market, you're going to see things happen like we're seeing today.
While a bunch of the markets could look frothy, there might be room for the Fed to normalize rates.
The economy and the stock market don't always go in unison. This seems to me to be a year in which Main Street beats Wall Street.
In a world that is still tremendously uncertain, people are still going to want a high share of safe assets in their portfolio.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Are we hitting pause on the cyclical trade from New York City for our audience worldwide? Good morning, good morning. This is Bloomberg Surveillance live on TV and radio alongside Lisa Abramowitz. I'm Jonathan Farrow. Tom Keene back with us on Monday. Your equity market back up with a lift, up 13 points on the S&P. We advance a third of 1%. We're still responding, reacting, Lisa, to that move we saw in the Russell at a close yesterday, a move lower at 3.6%.
Yeah, a big decline there, and one of the biggest favorites over the past couple of months. Mona mentioned this, Mona Mahajan of Allianz, and she was talking about the retail investor being really involved last year. John, I really want to emphasize how much we're seeing retail investors perhaps take a pause themselves as they can actually spend money on things like airplane tickets, maybe not in Europe, but certainly in the United States, and they can actually go out and use their cash. This, to me, is one of the biggest swing factors in the next couple of months.
But it plays into the broader theme, the cliche. You buy the rumour, you sell the news. You buy the rumour of reopening, you sell the news. And Lisa, this is the difference between peak expectations and peak growth. You want to make a move before you actually see the data. You don't want to wait for the peak growth. You want to make a move around peak expectations, which is terribly difficult to do. I acknowledge that. But we have started to see expectations really ramp up over the last several weeks. You see that in the forecast for 10-year yields. You've seen that in the forecast for the US economy, the GDP through 21.
It's one reason why I think that Jay Powell's message is so difficult on Capitol Hill, day 2 today of those hearings alongside Janet Yellen in front of the Senate Banking Committee, toggling between hope for the economy while also explaining why they are keeping their foot on yields, why they are continuing to buy $120 billion of bonds a month, talking about how this is temporary, it's not going to be that big of an inflationary push upward, and talking exactly to this. Perhaps people's expectations of runaway inflation, of incredible growth, have been overstated. It is a tough message to get across, and one that markets are digesting and continue to struggle with, John.
Well, I think he gets the lean on the forecast over at the FOMC. If you just take the forecast right now, deceleration is going to be the buzzword. 6.5% GDP for 21, 3.3 for 22, 2.1 for 23, rather 2.2%. And Lisa, we're going to see that. And I think that's the conversation we've got to have increasingly. Less about the boom through 21, a whole lot more about the deceleration from 21 into 22 into 23, and start talking about trend growth again. What does trend growth look like? And what do I want to own in the equity market in that environment?
How do you look out that far, though, when there are these huge question marks around a $3 trillion stimulus plan that might be dragged out over 10 years? I mean, this is the hard part right now about extrapolating out. John, I do want to say one thing. I don't think we made enough of this. Marvin Barth earlier on the show was talking about hippos and elephants, and he was talking about gazelles. And then our next guest was talking about rotational ugly ducklings. Animal theme today?
Animal theme today. How far would you like to extend said animal theme? What would you like to do with it?
If you could give any animal to the, no, I'm not going to go there, but I do think that there is a sort of feeling of trying to categorize and give some sort of flavor to this narrative, which is getting increasingly confusing, John.
Yeah, and I think we're just making it even more confusing. So let me turn to the price action just quickly. In the equity market, a lift on the S&P 500, on the Nasdaq up 0.75%, on the S&P up 15 points. We advanced 0.4%. Talked about this recent stability in the bond market. There it is for all to see. 162.07 on 10s were unchanged. In the FX market, a euro negative. Kick juice of SocGen really talking up and emphasizing, highlighting that move we saw lower in the euro yesterday, breaking that technical level, that 200-day moving average, 118.32 on euro dollar right now. And just quickly, Lisa, on WTI, $59.16, up by about 2.4%. Huge focus on the blockage in the Suez Canal. And I understand, Lisa, the latest headline that I've seen is they're still working on trying to alleviate that choke point on a really, really important trade route.
Yeah, and GAC coming out and saying that possibly that could get alleviated by today or tomorrow. There were incredible photographs of these small tugboats kind of tugging at the bottom of this massive shipping container, hoping to budge it where it was marooned. There is a question about how much this raises focus, though, on the larger issues of supply chain kinks that have created issues and caused shipping prices to rise globally. But this is transitory and temporary, as you've been emphasizing.
And really weighed on auto manufacturing. Just on the latter point there, Lisa, the chip issue is really weighed on auto supply. I know Matt Miller has been all over that every morning on the earlier edition of this program. Let's turn to Chris Grisanti now, MAI Capital Chief Equity Strategist and Senior Portfolio Manager. Chris, always great to catch up with you, sir. I want to start here. It's something I've talked about often with you, and I think it's important. Half the game often is to try and provide therapy for your clients to stay invested, to stick with a theme, to watch it play out fully. And we always get strangled by recency bias, Chris. It just sort of grips us and doesn't let us go. So when you see a correction, 3, 4, 5%, you start to extrapolate it out and confuse it with a new trend. So, Chris, what I want to understand for you and for our audience is the best way to approach these markets with all that in mind.
Well, Jonathan, it's nice to be with you again, and you, Lisa, too. I think the biggest news is to keep your eye on the long term and be aware of changes. That was true a year ago when the market bottomed. It's certainly true in the last few weeks of what I'm now calling the post-COVID market, although the last couple of days hasn't felt that way. I think the biggest news this week, honestly, is from the Fed. And I think we've got Jerome Powell acting like Dirty Harry. I want to say Dirty Jerry. And he's saying, go ahead, make my day to the bond market. He really means that he's going to keep rates low for at least a couple of years. And so that has real big consequences. He doesn't care how high the long end goes. He wants a steep curve, and we're getting that. And I think we all better get used to that and set up our portfolios accordingly.
So set up your portfolio accordingly for me, a world of low interest rates for the next 3 years at least.
Well, low interest rates on the short end, but higher rates on the long end, which also has consequences. But what I would say is there's two opportunities. In spite of the variance and the problems we're having in Europe, I really think it's wise to invest in a post-COVID market. It's a question of timing. Is this going to be delayed by a matter of weeks or even a month or two? But the post-COVID world is coming, and it's coming like a locomotive. There's never been as much stimulus, as you know. So it's not rocket science. We like the cyclicals. Financials ought to do well as long as there's no recession, which we certainly don't see. So, banks can loan at higher rates. The consumer is flush with cash as he or she hasn't been in a generation. So travel will come back and things like that. Those stimulus checks will make their way to car dealerships and boat companies and RV companies, things like that. But the other thing that's been interesting is how quickly the rotation has happened. So as Lisa mentioned, I have these rotational ugly ducklings, which were the stars of 2020, which have really been left behind. And there's a few I'd just like to throw out. One's Home Depot, which really has not done much since February of last year. It was a stay-at-home stock, and now nobody wants that. But they're selling at the lowest PE ratio that they have at lowest relative PE to the market in more than 10 years. So companies like that ought to do well going forward.
Rotational ugly ducklings. We had Marvin Barth talking about Giselle's elephants and hippos, comparing the Turkish lira to a hippo. How do you come up with this stuff, Chris?
You know, it's you know, you force it on me, Lisa. It's you guys who want us to be interesting, but seriously, the rotation gets left behind, and it's what's in fad, whether it's GameStop or Bitcoin, but the value at the end of the day, as Ben Graham said, the market is a weighing machine, and if Home Depot or others we like Lockheed Martin or Facebook, if they can produce cash earnings, the market will return to them.
If they can produce cash earnings, and that's where I was going to go, the signposts to learn whether your optimism is being borne some fruit going forward. What are you looking for? Is it just the earnings reports, or is there something else in the economic data that will give you confidence that your view is correct?
Well, we really study hard the individual companies' income statements. We love companies that can reinvest their capital at high rates of return, which all the ones I've mentioned can do. And there are companies in this cyclical rebound that can't do that. Many companies in the energy sector, for example, don't really earn their cost of capital. So even though they may have a decent 3, 6, 9 months this year as the economy strongly rebounds, they're not really great long-term investments. On the other hand, these rotational ugly ducklings will, over the long term, continue to produce strong, reliable returns. So when they're out of favor, it's the time to buy them.
Chris, always good to see you, sir. Chris Crisanti, MAI Capital Management, Chief Equity Strategist, Senior Portfolio Manager as well. A couple of things we need to get through this morning. I want to turn back just briefly to the news out of Germany and the U-turn from Chancellor Merkel in the last day or so. She asked forgiveness from the German citizens. Mistakes must be acknowledged and addressed, and has totally backed down on an Easter lockdown. But goes on to say, Lisa, we must break the third corona wave, and that's the reality of the situation that these politicians and policymakers are grappling right now with in Europe, which is a third wave of infections. At the same time, sincere, aggressive pushback around the prospect of a harder lockdown for an extended period of time.
That's the issue with guidance around this, right? I mean, basically, if you issue guidance that population views as too strict or infeasible given the fatigue that's set in, they're not going to follow it. What is the realistic guidance to follow? It's different for the Euro region than in the United States, but it does raise a messaging problem when hospitalizations are plateauing, not getting dramatically worse, but you have a group of people who are saying, enough. We're exhausted. Our kids are struggling, whether it's in school or socially. It's a difficult message for them to send. This was not a good move for America, and she's acknowledging it, which is probably the right way to go.
Lisa, I wanted to turn to you on this, but we were out of time previously. What do you think of Michael O'Leary of Ryanair just saying, up front, people will rebel. People will rebel.
He's not wrong. They will rebel, but that's a tough business strategy to go by. Break the rules, come back on our planes.
Yeah.
He's got to count in something more than that, John.
Well, I did try and push back there. I'm not sure if that is the actual strategy with the Ryanair CEO. Coming up, Congressman Don Baer, Democrat from Virginia and chair of the U.S. Congress Joint Economic Committee. Looking forward to that catch-up in a couple of minutes' time. From New York City this morning, good morning. For our audience worldwide, heard on Bloomberg Radio, seen on Bloomberg TV, this is Bloomberg Surveillance.
With the First Word News, I'm Rishika Gupta. The blockage that has disrupted traffic through one of the world's busiest shipping routes may be closer to resolution. A giant ship that ran aground in the Suez Canal has now been moved to the bank of the waterway. Once it is towed to a different position, dozens of vessels caught in a logjam could be allowed to sail through the canal. In Germany, that plan for a 5-day nationwide lockdown over Easter has been scrapped. Chancellor Angela Merkel says she made a mistake in backing it and asked for forgiveness from Germany's citizens. Merkel's trying to handle a surge in coronavirus infections and what's been a sluggish ramp-up of vaccinations. And it is the same old story in Israel, where a deeply divided country has failed to resolve a political impasse in its fourth election in just 2 years. Neither Prime Minister Benjamin Netanyahu nor his opponents have a clear path to forming a coalition government. And if no one is able to build a parliamentary majority, well, that means there could be another election. President Biden is urging Congress to pass gun control measures in the wake of the shooting at a Colorado supermarket. The president's called for background checks and a ban on assault weapons and high-capacity magazines. Earlier this month, the House passed a bill that would require background checks for all firearms sales, including those at gun shows. And Tesla. It's going all in on Bitcoin. It stunned the market last month with a $1.5 billion investment in the world's largest cryptocurrency. Now, CEO Elon Musk says you can buy one of his electric cars with Bitcoin. Musk also says any Bitcoin paid to Tesla will not be converted to a traditional currency. Global News, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Best view is that the effect on inflation will be neither particularly large nor persistent. And part of that just is that we've been living in a world of strong disinflationary pressures around the world, really, for a quarter of a century. And we don't think that a one-time surge in spending leading to temporary price increases would disrupt that. However, we have the tools to deal with that.
Chairman Powell on Capitol Hill, day 2 today, alongside Secretary Yellen in front of the Senate Banking Committee from New York City this morning. Good morning. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Live on TV and radio, here's the price action. About 1 hour and 12 minutes away from the opening bell. Equity futures are positive, up 0.75% on the NASDAQ. On the S&P 500, up 0.4%. In the bond market, stable there on 10s at 162.42. Euro slightly weaker, euro dollar 118.32, coming in about 0.1%. And a crude snapback, the rebound, the bounce is there, up by 2.4%. WTI $59 and about 16 cents. I'm pleased to say we can head down to Washington now to catch up with Congressman Don Beyer, Democrat from Virginia and chair of the Joint Economic Committee. Congressman, great to catch up with you, sir. I want to start with the events of the last 24 hours if we can. There was supposed to be a hearing just to go through some of the priorities for a bipartisan infrastructure proposal, which Republicans didn't want to take part in. And I want to read a quote from Republican Kevin Brady, who said the following: "In our view, today's hearing is nothing more than another partisan exercise so the Democrat House leadership can set up yet another multi-trillion-dollar one-sided spending bill." Congressman, can you tell us why it's more sincere than that?
I was really disappointed in Ranking Member Brady's comments because it didn't seem to have any connection to reality. We invited all the Democrats and all the Republicans to come tell us what their priorities should be in this next infrastructure bill. And I think Kevin Brady knows that there are many Democrats, including me, that hope that this bill is mostly or largely paid for. So this is a once-in-a-generation infrastructure bill that we'd love to have everybody's input for. By the way, it's going to affect all those Republican districts, too, in really major ways.
Well, let's talk about what's happened previously in the last couple of months. Do you think they have been conditioned by the approach to the $1.9 trillion bill where many Republicans felt totally frozen out of the process?
Yeah, although, I don't think they were frozen out of the process. There were extensive markups on this. The most controversial part for them was the $1,400, which came from their president, Donald Trump. And by the way, is affecting all their folks. There's a big piece, they were against the state and local government funding. To the best of my knowledge, no Republican governor or Republican mayor has refused to accept these funds to strengthen their communities. It was a wildly popular bill, is a wildly popular bill among all Americans, including Republican Americans, just not their elected officials in Washington.
Congressman, you said that they were presented with a bill that was mostly or largely paid for, but isn't that the issue? The way that it's being paid for through tax hikes on wealthier individuals and on corporations is something that Republicans have said is a no-go for them, that they don't want to do. How are you going to reconcile that issue?
Well, I don't know how we're going to reconcile it. I think we just have to come after it with the facts. Lisa, we did a hearing before the pandemic on infrastructure in Ways and Means, where virtually every Democrat and Republican said we need to have a way to pay for this and it needs to be sustainable. Well, we know that the gas tax is a no-starter for many different reasons, but we also saw yesterday that U.S. corporate effective tax rate last year was 7.8% after the JCTA, that the top 1% had their net worth increased by $4 trillion. Or just the New York Times editorial on Sunday about how, personal income is almost all reported in tax, but a huge part of business income is not, to the tune of $650 billion or $1.6 trillion a year, I think was the New York Times number. There's a lot of low-hanging fruit out there that wouldn't affect the economy.
Congressman, and these are points that are widely accepted among Democrats. However, there are Republicans that come back and they say, look, you're going to prevent a certain amount of dynamism, investment in things like infrastructure just by the corporations themselves if they have to pay higher taxes. And we can debate that till the cows come home. But the question really here is there any wiggle room to negotiate in higher taxes with Republicans, or is it going to have to be done without any of their support?
Well, I wish there were wiggle room. I think one place, Lisa, that might be fruitful is looking at carbon pricing. And now that the American Petroleum Institute, along with ExxonMobil and others, and the Business Roundtable and the U.S. Chamber, have all said that carbon pricing should be on the table, maybe we can get Republicans to do that. And at a minimum, pay for the roads and bridges and asphalt and stuff that they really like.
Congressman, what do you think the optimal approach now is then? Do you think it is a series of smaller bills or still one large bill?
Jonathan, I prefer one large bill, but I'm agnostic, whatever it takes to get the job done. I know drifting around is the idea that you take things you could get Republicans on board with, like highways and roads, bridges, and do that with their votes. And then the other more controversial things, although why broadband and electrical grid modernization should be controversial, you may have to do that through reconciliation. Or one other bite at the reconciliation apple this year.
Congressman, before we let you go, I want to ask you about Bitcoin. We've got Tesla now accepting Bitcoin as a form of payment. What's the regulatory front when it comes to that crypto asset?
Lisa, we're about to dive into that deeply. I think there needs to be. When you get a completely unregulated currency, while it's exciting and interesting, the possibilities for, everybody from terrorists to international mafia type things using it, or people just avoiding taxes on a large scale, are very real. So I can't tell you what the regulation is going to be, but it's worth very deep dives this year by Congress.
Congressman, if I shout walkies, do we create some trouble there in your house? Do we start getting the dog going?
He really does want to go outside, yes.
I can tell. I'll let you go, sir. Congressman, it's good to see you. Stay close. It's great to catch up. Congressman Don Via there of Virginia, thank you. Lisa, we'll turn from that story pretty quickly. Let's turn back to Bitcoin and Tesla accepted payment there. Look, it is a huge shift. And what I find quite interesting about this story this morning is not that they're accepting payment in Bitcoin, it's what they're doing with the Bitcoin afterwards. And the answer to that, if the guidance from Elon Musk, the CEO of the company, is anything to go by, is nothing. They will just keep it in Bitcoin.
And they want to basically diversify their capital reserves into Bitcoin. And we have seen a number of companies saying that. I believe Square said something similar. This is a question, though, and you raise this, which is that the price of Bitcoin is ultimately tethered to the dollar. Will it continue to be looked that way, particularly when it comes to buying products? And is this more of a commodity than it is a currency? A lot of it hinges on that regulatory landscape, which is why Congressman Beyer was important to weigh in on it. Basically, they could torpedo this effort, or they could give it legs and give institutions confidence to actually go in and buy it as part of their capitals.
They're not ready to move yet. That much is clear. From New York City this morning, good morning. Alongside Lisa Bravitz, I'm Jonathan Ferro, counting you down to the opening bell. About 60 minutes away. Let's call it 64 minutes away. On the S&P 500, futures up 17. We advanced 0.4%. NASDAQ futures up 0.7%. Yields with a lift now. It's just a basis point. Your 10-year up to 163.30. Your euro still weaker, though, off session lows. Euro dollar 118.35. And crude bouncing back by 2.7%. It's been a struggle over the last week for crude and energy stocks. WTI at 59 and 30. Coming up, some data in America. We'll get the reaction from Michael McKee and Torsten Slog of Apollo Management.
will start soon delivering also COVID-19 vaccines once all permissions have been granted. We are in discussion with Ministry of Health, with current logistic partners in different countries. So we're looking at Southeast Asia right now on delivering COVID-19 vaccines. We are also setting up already on the African continent in already one country and looking at the second country to expand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Economic data in America from New York City for our audience worldwide. This is Bloomberg Live on TV and radio. Equity futures pushing higher on the Nasdaq, up by 0.6%, on the S&P 500 up by 0.4%. As we await that economic data in America, let's bring in Michael McKee for more. Morning, Mike.
Good morning, John. Well, we're looking at the new orders for durable goods report, and it is not a good one. It's the first decline in 9 months. February's new orders go down by 1.1%. That's about $2.9 billion. It followed a 3.5% increase in January, and the forecast was for 0.5% increase. You exclude transportation, and new orders were down 0.9, so a little bit less. Excluding defense, new orders were down 0.7. Let me find the table here, because the thing we always want to look at is the capital goods orders. And capital goods orders, non-defense capital goods, excluding aircraft, down, it looks like, by 1.1%, by 0.8%. So it is not a good look overall for the economy in terms of activity in February. But remember how bad February was. We don't have a breakdown of snow shovels, but I bet there were some orders for those.
Although there is a question, is there a larger issue here of companies perhaps not investing as much as people thought they might in anticipation of this reopening?
Well, it's a little bit hard to say, Lisa, because these numbers are always so lumpy. We had big gain back in January of 3.5%, so maybe this is a little payback. Companies ordered at the beginning of the year because they knew their inventories were short, and now they didn't need to do as much in February. We'll have to wait and see how the March numbers turn out. It does tell us that we're not going to rocket ahead based on business spending, but we are at this point waiting to see how it averages out over time.
There is a question, Mike, and I know people are asking it, and Lisa's alluded to it there, as to whether the weather excuse is doing a little bit too much heavy lifting for what happened through February. What's your take on that?
Well, it's always the case. There's always a problem with weather. Retailers are notorious for it. We would have sold a lot more stuff except for the weather in the winter. But this is kind of broad-based. You see declines in most of the categories here. One thing we watch carefully is automobiles, and they were down 8.9%. Now, some of that is the fact that people couldn't get out because of the weather. Some of that is fewer cars being available because of the semiconductor shortage. And then some of that is probably the fact that people bought so many cars during the pandemic, and they may not need as much. The one other thing I want to pass along here is non-defense aircraft down 21.7%. That's the Boeing number, and their numbers are going to be really lumpy and affecting this because of their lengthy shutdown of the 737 assembly line. So they're going to have some months where they get some big numbers off. They get them off the tarmac and count those as orders, and there's others where they'll just be sitting there. So it looks like a sitting there month.
Mike, thank you. Downside surprise on the economic data in America. No big move in this market. I'll whip through things quickly for you. Bond market still basically unchanged at 162 on a US 10-year. Let's call it 163. Equity futures still positive, up 0.7% on the NASDAQ, up about 0.4% on the S&P 500. Euro dollar exactly where it was. We're willing to look through this. Euro dollar 118.33, crude up by 2.9%. WTI $59 and about 40-odd cents. Let's bring in Torsten Slok, Apollo Global Management Chief Economist. Torsten, you've seen your old colleagues, your old peers put out their forecasts for growth, for GDP for 2021, 6 handles, 7 handles, big numbers. Can we just start with the deceleration you anticipate from 21 to 22 and beyond?
Absolutely, Jonathan. I think that the number we just got is a very important data point because it does tell us that it is premature to talk about overheating. We have seen, of course, the reopening trade do well. But as Jay Powell has said yesterday, and he's probably surely also going to say today, is that we are still almost 10 million jobs behind relative to where we were in total employment in February of 2020. So the bottom line is that we will have a very strong growth numbers over the next few quarters as the reopening begins to play out, as the fiscal stimulus supports, and also both households and corporates have a lot of cash on their balance sheets that they're going to spend. So these three tailwinds will give quite a boost to GDP growth. But the key word here, as you're saying, Jonathan, is the deceleration in growth is important, namely for markets, it becomes critical to figure out the timing in when is the peak in growth and when we'll begin to see the numbers begin to slow down.
We often speak as growth and inflation sort of in tandem, and yet they are distinct aspects of this economy. Could we see a situation where we have very robust growth and inflation that still remains within the range that the Fed is expecting, which is pretty low?
Absolutely. I mean, there's a number of one-off factors, including base effects, commodity prices. You also have some health pricing issues that go into inflation. And all those things it really is correct what Jay Powell is saying. It is all temporary. And for the Fed to think about inflation, they always keep on emphasizing it has to be persistent. It has to really be a situation where the whole economy is boiling over, where the overheating really is very significant everywhere. And we're just nowhere near that point at this stage. It is clear that we will have strong growth. So, okay, we can start talking about that. But why don't we create the 10 million jobs first that we are behind relative to February of 2020? Then we can have a discussion about persistent inflation problems. And that's definitely not this year.
Torsten, there are a lot of straw man arguments being made against the 1970s type of inflation and how we're not going to see that. That seems likely that we're not going to go back to that kind of rapid inflationary environment. However, there is this idea that not only have we printed all this money that's about to be unleashed into the economy when people can go out and spend more aggressively, but there also are these supply chain kinks. We have people, companies bringing supply chains back home. These are all frictions as China gets less of a dominant place in the global import and export field. These are all frictions that could add to inflation. How do you account for that?
That's absolutely correct. But if you think about transportation costs, even if you think about commodity prices more generally, how big a share is that of total costs for companies? I mean, as a starting point, about 2/3 of cost for companies is labor. So that's first a discussion about if you really want an overheating economy, you really need to see much more upward pressure on wages. And that you will not have that in a situation where the labor market still is, again, about 10 million jobs behind. Now, you could say that if you look at the NFIB, there are some signs that the small businesses are saying that the biggest problem now is that they can't find the right workers, they can't find the right quality of labor. So there could be some pieces of evidence that maybe in some corners of the labor market, you could have some wage pressure. But very broadly speaking, to your question, Lisa, it is true that, yes, there are some problems in the supply chain, and there's certainly some issues that could lift things in particular because of commodity prices. But the bigger scheme of things, if you think about the total cost base for corporate America, it is still the case that commodity prices and supply chain issues are still a relatively modest amount of problems or compared to at least some of the other things that we need to see to have an overheating.
So, Torsten, let's talk about labor. If this was 2009 and we were talking about 10 million jobs short, we'd have a problem, and we did have a problem, and it took a long, long time to recover from that. But this is not 2009, this is 2021, and companies are shut because of policy, by decision. Governments are telling them they've got to stay shut in certain parts of the world, particularly outside of America at the moment, in Europe. So with that in mind, Torsten, I just wonder how relevant that 10 million number is. It's certainly relevant if you are one of them. It's a struggle, and we've talked about the pain in this labour market right now. But where the optimistic tone and the hope comes from is that as soon as you take these restrictions off, a lot of that's going to come back and come back quickly. So when we wake up in a summer, Torsten, I want to understand from your perspective exactly where we are in this cycle, because it's not going to be the same as what we saw coming out of 09 into 2010.
You're right. I mean, in some sense, the analogy is that we turned off the lights, and the question is, can the lights just be turned on now? Can we just restart the assembly lines? Can we get the smoke out of the chimneys of the factories that have been on hold while we have been in the pandemic? The issue here is, if you think about this in practical terms, you need to get airline capacity back to where it was before. You need to get people to stay at hotels. You need to get people to go to restaurants. You need to get people to go to sporting events, concerts, all the face-to-face consumer services industries. It's a little bit difficult to just see that as we're just turning off and turning on the switch here again and saying, well, now everyone will just go out and do these things. I still think it will take some time before those things get back to the levels where we were in February of 2020. But you're right. The upside risk could be that employment comes back faster, but still 10 million is a pretty big number when you think about where we are today. So I think Jay Powell, and the message we'll get from him again today, Jay Powell will say and continue to emphasize that, yes, it's true that there are some very significant tailwinds here, but why don't we wait a little bit longer before we take the champagne bottle out and celebrate and say that now we have declared victory over the pandemic? It is going to take quite some time still before we get to the point of full employment. As Janet Yellen said yesterday, we'll probably have to get at least into next year before we get back to full employment in the economy again.
This phrase, Torsten, let's just finish on this phrase, full employment. We hear it so much from economists, from you, from others too. I talk about it as well. I just don't know what it means anymore, Torsten. What does it mean for you? What are you looking for? What's the data point that says, sure, we're there, we've made it?
Yeah, so that's right. So that's why watching the dots in the dot plot from the Fed's forecast, the ACP, the Summary of Economic Projections, is quite important, at least as a guidepost for saying, hey, maybe we have difficulties in markets quantifying this, but at least what is the Fed saying is the unemployment rate that we need to get down to. And they are saying that we need to get down to an unemployment rate more close to around 4. If we get a 4 handle, then we may begin to see more upward pressure on wages, and therefore, in their view, also more upward pressure on inflation. And given where we are now, with an unemployment rate today of more than 6, we still have quite a ways to go. But you're right, Jonathan, it could also be that some parts of the labor market could be a bit stronger, but it is critical, this question of how far are we away from full employment. But it's pretty clear that, and this is again what Yellen was saying yesterday, that we're probably not going to get to full employment in 2021.
Hey, Torsten, good to catch up. Good to see you. Important conversation. No doubt we'll have another one very soon. Torsten Slok, Apollo Global Management Chief Economist. And Lisa, on the point of how quickly things will come back, what will stay away, what will take a long time to recover. Business travel is a big debate on this program. And I know for our audience as well, how quickly will business travel come back? Still unknown.
And will it come back in its full form as people can lean on Zoom to some extent, perhaps not entirely, but to some extent? There's also a bigger issue here. When you talk about business travel, it fits into a larger story of a changing world in light of Zoom, in light of the work from home trends, in light of some of the removal of services that may not come back. And I think as we talk about full employment, what will those jobs look like, particularly on the lower end, and how much retraining needs to happen in order to get people back into the labor market, John?
I just think human interaction is so important. And if I can get an edge seeing a client face to face, people are going to look for that edge. You do Zoom, I'll go and see the client, let's see who gets the deal. And Lisa, I think a lot of people on Wall Street will be thinking the same way.
I think you're right. I think on the margins, there is a question of whether people will cut back where they can.
Yeah. From New York City this morning, good morning. As we approach the opening bell, I'll be catching up with Brian Nick of Nuveen Asset Management to talk about the big debate at the moment. Has the cyclical trade run out of steam? Are we just pausing? Are we correcting? This is Bloomberg.
With the First Word News, I'm Ritika Gupta. A new survey finds that President Biden's likely wins on taxes will come in the form of higher individual rates and tougher audits on wealthy Americans. Bloomberg surveyed 15 current and former White House and congressional aides specializing in tax policy. They said that a proposal to tax unrealized capital gains can't make it through Congress. U.S. Treasury Secretary Janet Yellen has promised to work with Congress to ease the $10,000 cap on state and local tax deductions. That's known as the SALT cap. And it's been one of the key areas of focus for lawmakers in New York and New Jersey. The limit was put in place by Donald Trump's tax law. Lawmakers from high states say that's caused their constituents to pay higher taxes. Yellen says she wants a fair remedy for the issue. And American refineries are buying more Russian oil than ever before. That comes at a time when Washington is talking about energy independence and warning Europe not to become too dependent on Moscow. Sanctions prevent U.S. refiners from getting Venezuelan crude, and OPEC has cut back shipments. So last year, Russian oil became an option. Russia was the third largest supplier to the oil to the U.S. in 2020. And Intel has unveiled an ambitious bid to regain its manufacturing lead. The company will spend billions of dollars on new factories. Plus, it will create a foundry business that will make chips for other companies. And it's an aggressive move, putting Intel in direct competition with the world's most advanced chip maker, Taiwan Semiconductor Manufacturing. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ruchika Gupta. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Model minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not producing inequality.
We need better public policy and we need companies to step up.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Successful because when I was a kid, 3 afternoons out of 5,
after school, if I wasn't doing something else, I was in a museum looking at things. And I love museums, and I wanted to make them greater and greater and greater.
That was Leonard Lauder. He is Estee Lauder Chairman Emeritus, as well as the former Chief Executive Officer and also the son of a number, the two people who founded this company. David Rubenstein, he interviewed him on a peer-to-peer conversations that's set to air in the upcoming days. David Rubenstein joining us now, the host of Peer-to-Peer Conversations, as well as the founder of Carlyle Group, joining us here. David, a fantastic rags to riches story, one of the most storied makeup companies in the United States, Estee Lauder. What was the biggest standout message from this interview?
Well, the company started very modestly. We now know it as a spectacular company. And Leonard Lauder often is said, well, you join your mother's big company, Estee Lauder. But actually, when he joined, it had $800,000 of revenue. So it was a modest company. And he really helped build it. He made his mother into the face of the company. She wasn't a business person per se. That was Leonard, and he really did an incredible job of building into one of the most successful companies in the country.
And when you talk about the modest inception of this company to where it is now, you asked him about a modern entrepreneur trying to get into the game in the same kind of way and launching a brand. What was his insight and how things have changed now versus then?
Well, it's more competition, harder. In those days, it was easier to kind of sneak up on competition. But he had a big competitor named Charles Revson, who built Revlon. And Revlon was the 800-pound gorilla then. And Revlon once tried to buy Estee Lauder for $1 million. And his mother ultimately decided not to do it. Had they done so, we wouldn't have heard of Estee Lauder probably. But it shows you can overcome gigantic competitors if you're really persistent and you're really smart. And Leonard was. Leonard really was the genius behind this, the branding of the company and the business of the company. His mother was a terrific symbol, though, of the company.
I feel like we can't talk to corporate leaders right now without talking about the pandemic and how it's affected their business and the way they operate in offices and beyond. How has the idea that people are working from home and aren't socializing as much affected the landscape for a makeup company that has to do with perception? I mean, has it been enhanced through the ideas of Instagram, or has it been taken away from just because people are not going out and being with their friends as much?
Well, I think people are putting makeup on when they go do their Zoom calls and other things, so I don't think it's adversely affected the industry completely. But surely when people are not doing as much socializing as before, it's probably not as favorable. But I do think the company has incredible brand, and it now has something like 28 different brands. So just Estee Lauder is the main brand, the name of the company, but they have bought many other brands over the years and built some, like Clinique, for example.
So since you yourself are co-chair and co-founder of Carlyle Group, I do want to ask you about the pandemic and how it's affected some of the morale. We've heard from Citigroup's Jane Fraser about how they plan to boost morale for companies that have Zoom, for individuals that have Zoom burnout. And we hear from another group of Wall Street firms that their employees are struggling at home after working with kids, after having a very little break between home and work. What's your response to that, and how much have you observed this Zoom fatigue among your employees?
Well, I think Zoom fatigue is everywhere. It's been over a year now, and I've been living essentially in this house for about a year, a house that I've lived in for 30-some years, but I hadn't really spent much time in it compared to the last year. But I do think that ultimately the businesses that are operate out of office buildings will go back. I doubt, though, that people will go back and work 5 days a week, 10 hours a day in their office. I think people will increasingly want to spend some time working remotely, and I think that's not a bad idea. But I do believe that people would like to get back to work when they believe it's safe, and they have to make certain that there's not going to be any chance of catching a virus. But I think it's going to take another 6 to 9 months before that happens.
Have you observed, though, that productivity is starting to decrease around the edges among employees who are struggling with this work-home balance that has gotten upended by the pandemic?
Well, in the private equity world, it's hard to say that because the private equity world has adopted to Zoom quite well, and we've been doing deals, raising money, and exiting deals at a quite good pace. So I can't say that productivity has gone down, but I do think everybody would like to get back to what is used to be considered normal. But I do think that normal in the future will be considered to have some work done remotely. I don't think people will travel as much as they used to. I used to fly halfway around the world for an hour meeting, and I don't think that people like me will do that again.
That's actually been a debate that we've been harping on this morning, the idea of business travel returning and how much. And my colleague John Farrow made a really good point that if I can bring you a bottle of wine and see you face to face, I'm more likely to win the deal versus not. So business travel will return. Where will it return and where won't it return from your perspective in your world, David?
I think travel that is global, where you have to travel halfway around the world for a meeting, that will be slow to come back. But if it's going from Washington to New York or New York to Boston or Philadelphia to New York, that's relatively easier to do. So I think shorter distances will probably still see a lot of meetings. But if you have to travel an enormous long time to get somewhere, that will be harder to get done. I do think there'll be some of that for sure. Some businesses require you to do that, but I do think it'll come back more slowly than we would like.
Just going forward right now, the theme of the morning has been peak optimism, peak reopening, and we have felt that a lot of the forward action of the earnings that we are going to see has already been priced into the markets. From your vantage point, as far as deals getting done, do you see things starting to slow as people believe that the window is kind of up for sort of peak perfection in markets as the economy now has to catch up?
Well, predicting what's going to happen in the market is always a dangerous kind of undertaking, but I do think that as long as interest rates stay low, I do think that you'll see a fair amount of deals getting done, and I don't see a real slowdown. I do think that the SPAC market probably has slowed down a little bit of late. I mean, it has been very robust. It couldn't keep going on at that pace forever, and I do think some SPAC prices have come down. But generally, I think SPACs are probably here to stay for a while, at least at some level. I do think that the financing markets are still relatively robust, and I don't think a slowdown is imminent, in large part because the $1.9 trillion stimulus bill is going to keep the economy in reasonable shape for a while.
David Rubenstein, thank you so much for being with us. And the interview is phenomenal. I recommend that everybody watch it. That was David Rubenstein, co-chair and co-founder of the Carlyle Group, as well as the host of Peer-to-Peer Conversations. And you can catch that interview with Leonard Lauder, the Estee Lauder Chairman Emeritus and former Chief Executive Officer, to 9 p.m. tonight in New York. It will be airing on a continual basis, but it really does dig into this sort of rags to riches story that used to be the hallmark of American capitalism. And there is a question of how that has been transformed in an era of Amazon, in an era where there is more dominance by some of the top players. Here we are in markets seeing a bit of a rally as we head into the day 2 of testimony on Capitol Hill. Janet Yellen, Chair Jay Powell taking the helm at the Senate Bank